Oh, fuck. How come I see the color gray? Not the same, yeah. The gray. I'm a refugee and I grew up on the south side of London. Found me in a dungeon. There's a dungeon. Like, we talk assumptions. We don't talk to just go off assumptions, yeah? True story. Yours and there's two stories. Concrete jungle and it never say. Oh, I gotta restart the stream, bro. That's the wrong category. Fuck. Restarting the stream, bro. Wrong category. Too tempted to get higher. Too tempted, I'm inside. Is mine. No, fuck. I forgot to change the title too, bro. Fuck. I can't change the title while I'm on stream. Turn off my Remind me again. Seen that before, but can you remember me again? To lean up. Remind me again. I'm involved. I'm involved. Try to get to work. Choose to be, I'm tempted. I'm tempted. And we tempted. Too tempted to get higher. Too tempted, I'm inside. Smart. Too tempted to get higher. Too tempted, I'm inside. Mine. Remember me again. Seen her before, but can you remember me again? Selena. Remember me again. She to see the way her bunda hard stars. She might be a free hard in a rollie, cause I have my be asleep. Clean up. Waking up to nothing's a disaster. Let's wait till we get some people in here before I start the breakdowns. Connecting. There we go, buddy. Stop playing with me, bro. TikTok wanna troll. Live disconnected. No, it's not. Bro, why you keep disconnecting, bro? Like, hello? Do y'all see me? Or what? Let me put TikTok up my phone, bro. Let me pull it up on my phone first, bro. Mic check. Okay, yeah, we still live, bro. Let's go. All right, let's get into some trade breakdowns, bro. Nas 100 daily time frame. Well, let me just make sure the music's not too loud. Okay, the music's definitely too loud, bro. The music is definitely too loud. All right, let's check now. The music's still too loud. Mic check. Mic check. All right, wait a little bit better. Just a little bit better. All right, there we go. We good. Get into some breakdowns. Nas 100 daily time frame overall bullish, making a new high. Very, very, very simple. 4 hour time frame. What are we doing? Highs and high lows. We're internally making new highs. 4 hour bullish, daily bullish. Let's go to 1 hour time frame. Get on the 1 hour time frame. This is our current high. This is our current high. This is our previous high low. This is our 1 hour consolidation. Let's wait for buys as we break and retest above this area. Very simple. That's really it. If not, we could look for a price to pull back into this area for buys here. Being a 4 hour break and retest. But again, I don't want to buy while price take this low, so we're gonna have to delete that. So that's very simple on fucking Nas 100. What else could we have? Let's look at gold. We got cooked last week on gold. Not gonna lie. So daily time frame overall bearish. We took this low here. Bearish, but we're in a daily retracement. We have a doji candle and a bearish engulfing, what it looks like on this current daily candle. So daily bearish. Go to 4 hour time frame. Our 4 hour is now bullish though. We took this high over here. So this is where our 4 hour decided to go bullish. We're bullish as long as we stay above this higher low. Right over here. Let's go to 1 hour time frame. 1 hour time frame is bearish. We're making new lows as you can see. We look like we're taking this low right over here. This is our current high in the 1 hour time frame. This was our previous higher low right over here. This is our 1 hour range. But I don't want to trade inside this range at all. So I'd rather wait for we break down on the 4 hour time frame to take a trade on gold. And that doesn't happen until we clear these lows down here. We can look to take some trades below this range. This is way far from current price. So I'm not gonna get no trades here today on gold at least. Let's go to 1 hour again. Yeah, I don't want to trade this price action. This price action looks shit. I got faked out here last week 2 times. Don't want to trade this price action again. So let's wait for a price to either break below here for sales or break above here for buys. That's it. Let's look at NZD/USD. Looking at NZD/USD, daily time frame overall bearish, making a new low. 4 hour time frame overall bullish, making a new high. 1 hour time frame bullish as well. So I want to buy rather than sell. Very simple. This is our current high. This is our previous high right over here. That's where retest actually failed. This is our current higher low. So let's measure this fib level retracement. See how deep this pullback is. Okay, we're rejecting off of a fib level inside this structure. Could have some buys off of this area. So we can take some buys above here. Some buys actually right here off of this fib level retracement that lines up with this level down here. Let's look left. So this is a strong level that got previously rejected. You can take the buys off in this area. Let's go to 5-minute chart. Okay, the entry we would have had already got it triggered, so we can't get in this buy now. It's too late. But if I wanted to buy in this area, I would have had to enter off of this lower high shift right over here for a buy. Stop loss below these lows down here, and I could have looked to target the top of this range. But now looking at it on the 5-minute chart, we're now looking like we're coming down to re-break this 5-minute low. So if that does happen, I really don't want to take that buy anymore unless we have a new lower low, lower high, and then a shift to take it down here. So we still could have buys in this area, but I need price to take this low first. So far, I like that setup. But I don't like it the best because, again, I'll be trading right into all of this range. This is a lot of range right over here. A big nasty range. I don't really want to trade in that, to be honest. We could have this trade play out down here. That's that. So let's look at gold. I don't want to trade gold. NAS 100 is okay. Let's look at US 30. US 30 daily time frame overall bearish, making a new low. Going on a 4-hour time frame, bearish, making a new low. I want to sell overall. Look on a 1-hour time frame, we're bearish, but we internally structured bullish. This is our current low. This is our previous low. This is our current low or high. Boom. Boom. For me to sell, even though because I said I want to sell, for me to sell, I need the 1 hour to go bearish first. So I need price to come down and reclaim these lows down here. I don't want to trade inside this price action right over here as we go on the bullish. I don't want to sell this bullish momentum. I need this low to get taken first. So selling below here isn't the best idea either, because then I'll be selling right into this smaller range for potential rejections off of this area. So I would rather actually take the sell down here, give me a bigger range to trade and a higher probability setup. So this is nowhere near current price, so probably won't be trading this today either. Let's continue. Let's look at Euro JPY. Daily time frame, overall bearish, making new lows. Go on 4-hour time frame. We create some eagle lows, potential to go bullish. So bullish on the 4-hour. Let's go bullish on the 1 hour as well. I want to buy rather than sell. This is our current high. This is our previous high. That's this big retest failed, but this is our current higher low, all the way down here. So just look at this on the 4-hour time frame. So yeah, we could have some sells below here. If the this is where the 4-hour and the 1 hour both go bearish at, below this area right now. Based off of the 1 hour time frame, we could look to trade off of this fib level. Again, we have a fib level retracement sitting right over here. Let's see the 5-minute chart. See the pullback on that retracement. So again, so we would have got triggered off of this area right over here, with buys as price closed above, stop loss below these lows, look to target these highs. Boom, that's would have been a trade, and then we could have a runner position to these highs all the way up here, which is clean traffic to the left hand side. But looking at this trade now, it already happened. It's too late to get in now. So as far as buying off of this fib level retracement, we missed this entry, so we could just wait for a new entry above here. But this fib level trade, we already missed. We missed this entry technically before this retest. It happens. How long stock expected to go? I don't know. LLY stock. I never even heard of that, bro. To be honest. But you can never predict the actual low. You can get an estimate, but knowing how far something is going to drop. You look at previous projects to the left, look at for areas that are previously well rejected, and anticipate that those levels will get rejected again with confirmations on lower time frames. Let's look at GJ daily time frame. What are we doing? Overall, making a new low, daily bearish. 4-hour time frame, bullish. 1 hour time frame, bullish. Rather buy than sell. Let's mark off our ranges. This is our current high. This was our current high low. This is our previous high. So we can get a pullback into this area for a potential buy if we pull back deep enough. If we don't pull back deep enough, we could take a buy above here. Ideally, I want to buy rather than sell, because that 4-hour and 1 hour are both in bullish phases, right? So if our 4-hour give a pullback down here, we can have this break range just to continue up, and then we can look to target these highs here. If we break above this area, we look to take this break range and look to target these highs here. So that's that. What else? DPCHF daily time frame. What are we doing? Making new highs. 4-hour time frame, making new highs. 1 hour time frame, making new highs. I want to buy rather than sell. Very, very simple. This is my current high. This is my current high low. This is the overall range that price is actually in. I want to buy, but I don't want to buy inside this current range. I'd rather wait for price to break above the range to continue higher. As far as sales, the 1 hour goes bearish below this level, but I don't want to sell under this level because I'll be selling right into this one. So ideally, I would just ignore this mid level and just strictly focus on this level right over here. Got our 4-hour time frame. Below this level 4-hour will be in a retracement phase. We could take some retracement sells below this area and look to target the bottom of this range right over here. So this is a counter trend trade for sales, but it doesn't mean it can't play out, right? It is a possibility. For y'all who don't know, for the new people that joining into chat, I am a directional bias trader. I trade with higher time frame directions because I strongly believe that The lower time frames tell you how the higher time frame candles will close, right? Understanding that, I use low time frames for entry, but also understanding that the market can either go two ways, either bullish or bearish. That's it. So if you're on the right side of the market, majority of the time you're going to win or make money. You just have to get better entries if you're losing while you're on the right side of the market. So if you go up or down, as long as I'm on the right side of the market, my chances of winning are a lot higher than if it was I was trading against the trend. So that's what I think about GBP CHF. Let's continue. USD JPY. Daily time frame. Let's see what we're doing. Are we making new highs or new lows? We're making new highs. 4-hour time frame. What are we doing? Making new highs or new lows? New lows. But it's overall in the consolidation phase of making new lows. So daily time frame making new highs. 4-hour time frame making new lows. 1-hour time frame, new highs. It's contradicting. So because the 4-hour and 1-hour are contradicting, I'd rather wait for a breakout in either direction, either above the 4-hour range or below the 4-hour range. Trading inside this range is too risky. There's no decision in this area. I'd rather wait for price to pick a direction that it wants to go, which would be buys above this area, because the 4-hour will be bullish, breaking above all of these highs in the 1 hour, and so will be the 4-hour, be bullish above this area. As far as sales, again, still an indecision level, right? So below here, where the 1 hour will go bearish, and the 4-hour will go bearish below this level as well. If we take these sells, we can look to target these lows here, and if we take these buys, we can look to target these highs here. Very simple. Let's continue. GBP USD. Daily time frame, we're making new lows. As you can see, we're just in the retracement phase of a new low. Lower low, lower high, lower low. We took out all of these lows to the left hand side. How do you feel about UPS? No idea. 4-hour time frame, overall making new highs. 1 hour time frame, new highs. So I want to buy rather than sell because I have 4-hour and 1 hour both telling me to buy. So this is my current high on the 4-hour time frame. This is my previous high on the 4-hour time on the 1 hour time frame. This is my current high low on the 1 hour time frame, right? So this is our current range. We could look for price to pull back into this area right over here for potential buys. That's really it. Look on the 4-hour chart. This level is a mid level that's kind of weak. We have a level sitting right below this level sitting down here. So instead, I would just drag and adjust, refine this line to catch this rejection and to see how this look on the 4-hour time frame. So yeah, below this level, we have a 4-hour going bearish below this level. Also, our 1 hour going bearish below this level, and we can look to trade it below here if price decides to drop this far. Other than that, I will wait for a retest back into this area for potential buys. I did like the setup, so we're going to add this to the top of my watch list. I need to get a bottle of water. I'm thirsty as fuck. Let's continue. So far, the trades I like to take today, I like GU, I like NZUSD, but I like GU a lot better. This is like a very lower quality trade, just because we have all of this consolidation here that could give us trouble if we took the buys off of this area. This price action here could give us trouble. So that's one thing I don't like about this trade, but I do like the setup. Just don't like this price action here. NAS 100, buys above this area, currently in the retracement phase. Don't really want to touch that because we look like creating equal highs and rejecting. So I don't want to buy just yet. I want to wait for this level to get cleared up first. Gold overall making a new low. Don't want to trade inside this range. This is a indecision level. So I need price to pick a direction first. Either we go bullish on the 1 hour time frame above this area, in the 4-hour time frame above this area, or bearish below this area on 4-hour and 1 hour. Right. That's it. US 30. Indecision level once again. Price took this low here, and now we're making new higher highs and higher lows. Look at the left hand side of the 1 hour time frame. 4-hour time frame took this low as well. Again, this is just a 4-hour retracement for a bearish continuation possibly. But again, I don't want to trade against this overall higher highs and higher lows. I need this low to get taken first. If price takes this low, I don't want to trade right into this low either because this is too small of a range. I'd rather trade in a bigger range, which is down here. Just this low recaps. Looking at Euro JPY, we're overall bullish above this area. We're in the retracement phase, but buys off of this area already happened, so we missed this opportunity. The move already started. So I don't want to FOMO in these buys stop loss below this low. Instead, I'll wait for a new setup, which will be buys above this area, being as though buyers are pro-trend. But if the buys don't play out and price starts to break back down and come down to break these lows down here, this is where the 4-hour goes bearish. So we can take some sells below this area. And GBP JPY, buys above this area. If price gives us a deeper retracement and start to form some lower lows, lower highs on the way down, we can look to take buys off of this area. GBP CHF buys above this area, sells below this area. This sells is counter trend. That's why it's a red dotted line. Noting that this is a counter trend trade below this area. USD JPY overall inside the indecision level. There's no clear direction, so I don't want to trade with there's no direction, right? This is just consolidation. It's just a chop, chop, chop. I don't want to trade a chop, right? So I'd rather wait for price to break above or break below this overall range. If we sell below this area, we can look to target these lows. If we buy above this area, we can look to target these highs up here, or even these highs up here. Euro JPY. Euro USD. Let's get into it. Daily time frame. What are we doing? Making new highs and new lows. We're making new lows, right? Reason why I know we're making new lows because we took out this low right over here, and we took out this low right over here. Very simple. Daily time frame is bearish. 4 hour time frame, we're making new highs. How do I know we're making new highs? We took out this high right over here. We took this high out right over here. So again, 4 hour is bullish. Let's go to 1 hour time frame. 1 hour is bullish as well. 1 hour time frame is bullish. This is our current high. This is our previous high. This is our current high or low. Easy, easy, easy. Current high, previous high, current high or low. We can look to take some buys if we get a retest in this area. If price continues higher from where it's at and doesn't ever make it down to this area, we can take buys if we get a break and retest to this area. Either or. 4 hour time frame, I don't want to sell below this area because this is for our bullish market. And looking at this retracement here, if we pull back deep enough, this will be a fib level retracement buying off of this area. So that's also a good sign to buy at this area. Even though that's a 4 hour bullish fib. But again, our 4 hour is still bullish, making a new high, higher low, higher high. So I don't want to sell below this area either because I'll still be selling against this 4 hour bullish move. 4 hour goes bearish below this level, so this is where I'll decide to sell. I like this trade idea. Let's add this to the favorites, put it above NZD. Let's continue. Did this already. Let's look at AU. AU daily time frame. Are making new highs and new lows. Clearly today making new lows. 4 hour time frame. New highs and new lows. We're making new highs. 1 hour time frame. New highs and new lows. New highs. This is our current high. This is our previous high. This is our current high or low. Right? This is our range. So this is our range. Let's look left to see how this range looks. I do like this is a very strong level here. This level here is pretty weak. This is a very strong level. Off the rip, I want to say we could sell below this area. Selling below this area, we can look to target these lows down here. And looking on the back to 1 hour time frame. Again, this is a decision level. There's no clear direction just yet. This is just consolidation. I don't want to trade consolidation. I only trade trending markets. So I'd rather wait for price to pick a direction above the area to take buys because our 4 hour is making a new high. Means though we're making a clear higher high, higher low, higher high, higher low continuation, right? Very simple. On a 1 hour time frame, again, same kind of price action, higher high, higher low, higher high, higher low. Similar. Alright, I want to buy overall, then I want to sell. So buys above this area. If we take a buys above this area, we can look to target a 1 hour level looking left. Price action, we can look to target this area here. I gotta be mindful of this area here as well. That's about it. Let's look at GA. Daily time frame, what are we doing? Are we making new highs and new lows? That's the question I always ask myself no matter what chart I go to. Are we making new highs and new lows? That's how I just establish my direction. Daily time frame making new lows. How do I know? Because price took this low right over here. We have a lower low, lower high, lower low, lower high, lower low. Ideally, new lows. People might be saying new highs because they see this retracement, but again, this is not a new high because in order for it to be a new high, it has to break the previous high. This is my previous high. Price never went above that area, so technically we are still making new lows, but just in a retracement phase of making new lows. I said that kind of fast, but yeah, it just get repetitive saying the same thing every day when I come to the chart, to be honest. So daily time frame is making new lows. 4 hour time frame, we are making new highs. Looking at this structure, we took this low right over here. So went bearish a little bit, and then we end up taking this high. Started to go back bullish, then price never took this low. So again, we just created equal highs, consolidated, and now we have a new high over here as price decided to break above this high. So we're making new highs on a 4 hour chart. 1 hour chart, we're making new highs as well. Just look at this price action here. We have equal lows. Price broke above this high, made a new high, pullback, retest, continuation, retesting this previous structure here. And boom, this is a break and retest. Right, double bottom or equal lows. Now we're breaking above this lower high over here for the trend continuation. So Let me go back a little bit. Daily time frame making new lows. 4 hour time frame making new highs. 1 hour time frame making new highs. I want to buy rather than sell because I have more time frames that are making new highs rather than time frames making new lows. We can look to target this high here. This is our current high. This was our previous high. Back over here, this is our current high or low. So, we could have took some buys based off of this area right over here, but again, this was Friday's price action. Market open right over here. We just continuation, but it never gave us an actual entry. So I don't want to trade inside this price action because this move already started. I really don't want to trade. I don't want to FOMO in a position that already started when it only has about 17 more pips into our next rejection area, right? It doesn't make sense to trade that kind of range. Instead, I wait for a better setup, which we buying above this area as we make a new high for our new breakout. Break and retest, we can look left hand side for our new highs to target. We can look to target this high here, or we can look to target this high here. I like this high here a little bit better because we have a level of resistance here, a level of support here, and this level got faked out too many times already, to be honest. So this is the better level to target. I'm adding this to my watch list. It actually moves nice. Yeah, it's low-key moving nice. So daily making new lows, 4 hour making new highs, 1 hour making new highs. Okay, so if price comes up here to create equal highs, project this area, and then sell off, we can look to take sales below this area, right? I don't want to sell off of this area because price could easily just fake out the sells and then make a new highs and continue, right? So selling here is counter trend. Don't want to sell. Sells don't become pro trend until we take this low down here, but only if we create equal highs first. If we just take this low from where price currently is at, I still don't want to sell this because this push down didn't make a new high, so this is technically not a shift in direction. This is still bullish structure, just a deeper retracement of an overall bullish trend. So in order for me to sell below here, we have to first create equal highs first, and then I'll look to take the sell. That's a high probability trade, but without the equal highs, there will be no trade there for me. Let's continue. Oh wait, that's all of my pairs. So far, I only like GU for today. Actually, we already got our 1 hour closure below. We just need a 5 minute retest. So we got the closure we want. We got the closure we would normally look for, which would be just 1 hour candlestick closure here on our breakout. Then we're just waiting for a retest to pull back on a 5 minute chart. So in the 5 minute chart, I want to see price take this low first. That's the first thing I need to see. I need to see price take this low. If price could take this low and form a lower, 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 high, lower, low. And I'll wait for price to retake this high so I can have a buy at that shift in structure as we go back bullish. Stop loss below these lows. Go back to 1 hour time frame to pick a target. Look to the left hand side. We have clean, very clean candles to fill in the rest of this range. This is very, very clean price action. We look to target these highs over here, or we can look to target this structure point right over here. Looking at this level of support right over here, or even this one here, right? This level is a lot stronger, to be honest. But we do have clean candles to fill, right? This is a lot of inbounds over here that gotta get filled. So we can look to fill this if we get this break and retest. We already got the break, we just need to retest. If it continues higher with no retest, that's okay, right? I'm okay with missing out on a trade. I'm not here to chase the trade. I'll take the same setups every single day. Break and retest, 5 minute, must have a structure on the retest. If the retest is too aggressive and doesn't have this lower low, lower high structure, to where we see something like this, as price is coming down, to slow down in volume, and then take, and I could take it, then I'll take it. If it doesn't look like this and it just aggressive just looks mad, the drop just looks mad aggressive like this, I don't take that setup because if the drop is too aggressive, it's probably going to be a fake out anyway. Meaning that this 1 hour breakout was just a fake out for price to close back inside the range to continue down. Very simple. That's for GU. So I'm looking at buys on GU. I just need to see this low get taken out first and then structure form as we tap into this area. Now look to take the buys off of this zone. Looking at EU, prices inside the indecision level. Don't want to not gonna get a trade on this tonight. Also just take it off. This could be setting up for tomorrow. Same thing with NZDUSD. Well, this is setting up for today actually. But looking on the 5 minute chart, I need to see this low get taken out first and have this lower low, lower high, lower low, lower high, lower low, something like this happen to take the long. But again, this is a lower quality setup just because looking at the price action to the left hand side of this area, this is choppy. So we are trading inside of a chop if we do take a buy here. There's no clean candles. The high quality setup with we have clean candles are above this area because again, looking left, we have clean imbalances to fill. There are gaps up here that hasn't been retested or rejected. Price is never going to go down or go up forever. Price moves in waves. So if price has an aggressive drop in one direction, 9 out of 10 that zone will get filled. Again, we have progressive drop down this area. Price has to fill this at some point in time. Being though our market structure is bullish at this time, we could look to fill it if we get a closer above these highs to the left hand side here. But as far as where price is currently at, it's not the best trade just because we're still inside this chop. That'll be it though. So I'm just looking to trade G. I'm not really not looking to execute anything else. I mean, NAS looks pretty decent. NAS looks better than NZDUSD, so we can add NAS up there to be honest. But I'm really looking to trade GU. If y'all got any pairs in the chat y'all want me to go over to give you a breakdown on what I think about it, just let me know. We're just gonna look at this on a 5-minute chart. Because we need to look at the hourly chart tomorrow, we already got our breakout. Then we just need a retest. Let me go get a bottle of water. I got something stuck in my teeth, bro. Fuck. Let's look at the YouTube channel. I didn't even look at it. This water not cold at all, bro. This shit room temperature for real. I ain't heard this song in a long ass time, bro. Why do I have a fake Parkham tray in my chat right now? Can you help me how to trade? I'm serious about it. What you need help with, bro? I don't know what you need help with. Hey, fake park come trade, bro. What you doing in here, bro? I'm a beginner, so like it's kind of hard. What do you recommend, like, to watch or learn as a beginner? Well, I need to get familiar with what you know already. So like, who have you been watching, and what strategy have you been looking into? Have you been looking into support resistance, or have you been looking to fair value gaps, or have you been looking to or like supply and demand? Like, what have you been looking into already? Do you understand how to identify a trend? Do you know how to identify if the market's making new highs and new lows? Do you know how to draw levels? Like, I need to get an idea of where you're already at. I would suggest though, watch people that live trade. You get more transparency from people live trading, not just videos. And engage in the people that you watch like that after live trade, and ask questions. So if you're a beginner, you can ask me any question. I'll give you a detailed explanation on whatever it is you want to know, or you feel like you lack. I watch TGR, bro, but it's not live, bro. You know. Oh yeah, so I know you probably watch TGR boot camp, so you probably trade liquidity grabs and fair value gaps, things of that nature. I think that's a lot. It's heavily overcomplicated, to be honest. But um, I guess that's just my perspective. What do you want to know though? Ask me something. I'll tell you. Like, I'll explain whatever it is you feel like you don't understand. Like, is there anything you seen already that you have more questions about that you don't quite understand? If you do, let me know. I can answer that for you. Like, what are the best strategies? There is no best strategy, right? That is the approach that a lot of new people come into trading with, looking for the best strategy. But there is no best strategy. The hack or the cheat code to being profitable is you, not the strategy itself. I could teach something to 10 people. Two of them will get it. 8 of them won't get it. And to the 8 people that don't get it, they're gonna say that person is a scam. That person don't know how to trade because they don't get it. But to the 2 people that do get it, they will become successful. So just there is no best strategy. There's no strategy that's better than others. I think just depends on the person and how well you understand the strategy that you're being taught. But I can say my strategy is the best. TJR can say his strategy is the best. Alex G can say his strategy is the best because that's our strategies individually. But there is no real best strategy. It's just about how you manage your positions that you are actively take, not necessarily strategy, I think. But as far as me, I think my strategy is the simplest. I'm not gonna say it's the best because I don't think there is a best strategy, but I do think I have the simplest strategy to trade. It doesn't require all of the other complicated concepts that a lot of people teach. I think, like, I don't need liquidity grabs. I don't need to see a 3 candlestick formation to determine a fair value gap. I don't need to see manipulation. I don't need to see an inducement. I don't need to see none of that stuff. I'll strictly look at the whether the market is making new highs or new lows, and I trade in that direction off of a major key level, aka support and resistance. Would you like me to go show an example? Here, bro, please. Okay, let me pause the music real quick so I can get into teacher mode. Okay, I mean, actually, you gotta engage in the chat as I'm explaining this. I'm gonna ask you questions. Let's go to a blank chart to where there's no price action, where there's no annotations. Let's look at GBP, USD. Let's go to one that I'm not actually using though. I'm not using this. Wait, how long did I do this markup again? Wait, is this my actual chart? It's not my actual chart, right? Because it's not my actual chart. GBP, USD. Let's go to this one. Okay, boom. Okay, before we get into the chart work, I'm gonna ask you a couple questions, right? Hypothetically speaking, say I am a street hustler in Times Square, New York, and you are a tourist. You're coming to play the game that's in Times Square, New York, busy street. This game that you're coming to play, I have a bag. You can't see through the bag. It's like a black bag. You can't see in it, right? And I have 3 crayons, right? 3 crayons in that bag. Well, in my hand before I put them in the bag. And there's only 2 colors for these 3 crayons. You can have 1 red, 2 blue, 2 red, 1 blue, all red, all blue, no matter the combination. Just 3 crayons, all either red or blue crayons, right? The game is, you bet which color crayon you're gonna pull out the bag. I put the crayons in the bag, I shake it up. But before I put them in the bag, you can see how many are red versus how many are blue. There is no hidden trick. There is no crayons turning from red to blue once I put them in the bag. Right? However, the way you see them go in the bag, that's how they're gonna stay inside the bag, right? So here's the game. I tell you, hey, you come to play the game. We do the whole introduction. Boom. I say, okay, let's play this game. There's 1 red crayon, 2 blue crayons. I put them all in the bag. I shake the bag up. Now, before you put your hand in the bag to pull out the crayon, you gotta bet me $1,000 that you're gonna pull out the right crayon. If you pull out the right crayon, I give you $1,000 on top of the $1,000 that you're betting. So I give you you gotta play. The entry fee to play is $1,000. If you win, you pick the right color, I give you back $2,000. If you lose, I keep your $1,000, and to play again, you gotta give me another $1,000, right? Okay. So I tell you, it's 1 red crayon, 2 blue crayons. I show you the crayons. I put them in the bag. I shake the bag up. You give me the $1,000. Now, what color crayon do you think you're gonna pull out the bag? If you put your hand in the bag and grab a random crayon, you want to grab one. Put your hand in the bag, pull out a random crayon. What color do you think that crayon is gonna be? What color would you bet your money on that you're gonna pull out, knowing that it's 1 red and 2 blue? Anybody can answer the question. It could be anybody. Blue. Okay. Why blue though? The odds. Exactly. That's right. You're gonna bet blue because of the odds. You got a higher chance of pulling out a blue crayon than you do got a red because there are more blue crayons in the bag. Right? So that is how trading works. The same exact way. Each time frame represents a different crayon inside the bag. The color of that crayon is determined by whether that time frame is either bullish or bearish. If price action is making higher highs and higher lows, know that is a blue crayon. If price are making lower lows and lower highs, know that is a red crayon. Again, the market can only go either 2 ways, up or down. So to make odds in your favor, all you have to do is be on the right side of the market most of the time. If you are on the right side of the market most of the time and you're still losing trades, that is because your entry timing is off. Your precision is off. What you see before you enter is the reason why you're losing. All you have to do is get better entries and you will start to make money. So to make trading a lot easier, look, this is the perspective I look at it. I just try to be on the right side of the market. Once I'm on the right side of the market, I go to try to get the best entry possible. And if I still lose with the what I thought was the best entry possible, I just refine my entries or my entry reasons or add confluences to support my bias. Is trading hard? No, trading is not hard. So are you following me so far though? So I hope you follow me so far. So hypothetically speaking, say I have a daily time frame making new highs. Okay, you say one blue crayon in the back. 4 hour time frame making new lows. That's a red crayon. 1 hour time frame making new lows. Another red crayon. What would you want to do? Buy or sell? I just told you daily was bullish, so that's blue crayon. 4 hours bearish, that's a red crayon. 1 hour was bearish, that's a red crayon. What do you want to do? Buy or sell? 1 blue, 2 red. Well, it's hard for me, and I'm very confused. You want to sell, exactly, because you have more time frames to sell. Well, you have more confirmations. You have more time frames are telling you to sell. Exactly. So that's how I trade. I use the daily time frame to tell me, are we making new highs and new lows? If you're making new highs, okay. In my head, I will mental note, okay, daily tell me to buy. 4 hour time frame, making new highs and new lows. New lows, okay. 4 hour telling me to sell. 1 hour time frame, making new highs and new lows. 1 hour time frame telling me to sell. Once I get there, then I go to the 5 minute for entries. So, hypothetically speaking, let's pull it up as a diagram form. Okay? Daily time frame, you see this, right? We have a new high. A 4 hour time frame, you see this. Alright, let's make this a different color so you know it's a different time frame. So daily time frame, you see this. 4 hour time frame, you see this. 1 hour time frame, you see this. Let's make this a different color as well. Again, daily is bullish. Good morning, Chess. Daily is bullish. 4 hours bullish. How do I know the 4 hours bullish? The blue is the daily, green is the 4 hour, red is the 1 hour. So daily made a new high. How do I know? Because we just broke this previous high to the left hand side. 4 hour, we're making a new high. How do I know? Because we just broke this previous lower high to the left hand side. 1 hour time frame, we're making a new high. How do I know? Because we just broke this previous high to the left hand side. Ideally, I will want to buy. It's very simple. Once I get to this point, say this is the current price. What I do is I take a horizontal line. I mark off my current high. This is current price. Mark off my current high. Overall bullish. Mark off my previous high. So this is my previous high, meaning the high that just rose frequently got broke. Mark that off as well. Now mark off my most recent low, or my current higher low, which would be the lowest point before making a new high, which would be this price point here. And that's where I find my zones to trade off of. Ideally, I want to buy because, again, the daily is bullish, 4 hours bullish, and the 1 hour is bullish in this example. So ideally, I would want to buy. Now, it's about where do I want to buy at. Okay, if price could pull back to this previous high, show me a form of rejection, I could look to take buys off of this area. That's a higher quality trade, just a break and retest, continuation. If price doesn't give me a pullback first, or say price pulled back a little bit like this, I'll wait for price to re-break this high and give me this break and retest. Again, both of them are break and retest positions. That's it. I'm not looking to set, and say this doesn't play out, right? Hypothetically speaking, say price comes down here and fails to hold. I'm not looking to sell this. Reason being, even though this sell could play out, reason why I'm not looking to sell this is because, again, our daily is bullish, 4 hours bullish, and 1 hour is bullish. Our 1 hour doesn't go bearish until we take out the most recent low that made that new high. So if this is the most recent high that got broken and made a new high up here, gotta find the lowest point before making that new high, which would be this lowest point here. So technically, anything in this area is still bullish, buyers in control until price takes this low. So I wouldn't be selling this, even though price is breaking and retesting a support level. This is still a low quality trade. So hypothetically speaking, say the buys don't play out, right? I never get a trade because it didn't give me my entry confirmations, whatever. Say price does something like this, and then takes this low. Now this is where the game switches. Well, the crowns in the back switches. This is no longer daily bullish, 4 hour bullish, 1 hour bullish. This is now 1 hour bearish because we are making a new low. So it will be one red crayon for the 1 hour, one blue crayon for the 4 hour, and one blue crayon for the daily, right? ideally, if you know those odds, are you still looking to buy or are you switching to a sell direction? Just come and say, hey, gotta work in the morning. Good night. All right, appreciate you stopping by, Chess. I hope you've been playing chess though. Anybody in the chat can answer. Now that the odds have switched a little bit, they're not all bullish anymore. Right? We have a 1 hour making a new low, 4 hours still making a new high, daily still making a new high. 1 red, 2 blue. What are your betting they're going? The blue or the red? That makes more sense. Again, the trading is a game of probability. So now that you know the odds are switched, where you have 1 red crayon, 2 blue, you still want to buy because the odds of you being successful on the buys is still higher. Is it? It's still higher because you still have more time frame telling you to buy rather than to sell. So in order for me to buy now, I wouldn't buy while the 1 hour is going bearish. I would just wait for it to go back bullish. And to find out where price goes back bullish, you just mark off the most recent high that created a new low. So in this case, market made a new low here, took out this low here. This is our current low. In order for me to buy, I want to see the 1 hour go back bullish, and that doesn't happen until up here, and then I'll take this kind of buy opportunity. It's very, very, very simple. That's why I said I think I have the easiest trading strategy, because I gamify trading. I make it as if it was a game. At the end of the day, it's a probability. So I look at it as if I was playing a game of probability, because that's what I'm actually doing. I'm only taking trades that support the direction of the overall market, because I have a higher chance of winning the trade that going that direction. What do you think about US 30? For US 30, I think this. Daily is making a new low. How do I know that? You might be wondering. Because we have a high here, a high here, a higher low here, a new high here. Price made a new low on a daily time frame. Daily time frame made a new low. That's 1 red crown in the bag. 4 hour time frame. Already making new highs and new lows. 4 hour time frame making a new low. How do I know that? Because we have a high, higher low, new higher high. This push down made a new low once again. Another red crown in the bag. Go to 1 hour time frame. New high or new low. 4 hour time frame is making new highs. How do I know? Because we have a high, low, higher high. So 4 hour is blue, crown in the bag. 1 hour is red, crown in the bag. Daily is red. I want to sell more than I want to buy, ideally. But I don't want to sell against the 1 hour already being bullish. So I would just simply wait for the 1 hour to go bearish and then sell. And that doesn't happen until price takes this low, because this is the lowest point before making a new high. This was the push that made us a new high. And this was the lowest point. Have you gotten a payout yet? Yes, bro. I have multiple payouts. I've been trading for almost 5 years. But just asking before I follow. I got you. It's all good. So let's go to a random pair. Justin, now that you understand everything I just explained based off of how I trade, I want to show you how I break down a chart. So let's go to a random pair, CAD JPY. I don't know. It's a random thing. First thing I thought about. It's CAD JPY. How many funded accounts have you passed with your strategy? I don't even know that answer. I've been trading for almost 5 years, so I passed a lot of funded accounts. Like, to know that number is kind of crazy. With 5 years trading, I don't even know how many accounts I failed. I traded so many different funded accounts. Right now, I have 4 fully funded accounts right now, though. I'm not in it taking any challenges. I'm fully funded on 4 different accounts. So, I'm going to put this in perspective of the actual live charts on a random pair. Thank you for 600 followers. To all the new followers, shout out to y'all boys and girls, if it was girls. But daily time frame, this is where I like to start off my chart analysis, right? My technical analysis, I like to start from daily time frame. I am a high time frame directional bias trader with lower time frame entries. Reason being is the lower time frames tell you how the higher time frame. Actually, let me explain that too. The lower time frames tell you how the higher time frames will close. I'm gonna give you an example. In one daily time frame, in one daily candlestick, that is 24 hours worth of data. So to see the details on what's going on in one daily bullish candlestick, it will take 6 4-hour candles. 6 times 4, meaning 6 times 4 is 24. So to know how the daily candlestick will close, it's 6 4-hour candles. And same thing for 4 hours. And every one 4-hour candlestick, you have 4 1-hour candlesticks. And every 1-hour candlestick, you have 12 5-minute candlesticks. 5 times 12 is 60. It's simple, right? So to give you an example, say this is say this candlestick right over here is one bullish candlestick on a daily time frame. Inside this bullish candlestick on a daily time frame, no, I'm not gonna say daily. We're gonna say 4 hour. Say this is one bullish 4-hour candlestick. Inside this one 4-hour bullish candlestick, let's put a line right over here so you can see the difference. This is a 4-hour chart. It's one candle. Inside this one candle, if I go down to 1-hour time frame, you will see something that looks similar to this. You will see a bullish candle. That's 1, 2, 3, then you'll see 4. Make this a different color. So in one 4-hour candlestick, you will see 4 1-hour candlesticks. In a bullish candlestick like this, where you have a open, a close, a wick, on that 1-hour chart, when you see the detail of this 4-hour candlestick, you will see that we were bullish. This is how the 4-hour candle is forming. Then you see price created a wick on the 4-hour candlestick. That's just letting you know that the 4-hour candle, that the 1-hour candlestick before that probably closed bullish. Our last 1-hour candlestick closed bearish or was a retracement of this top wick, showing you that this 4-hour candles is how this one 4-hour candle formed. Right? Hopefully that makes sense. So this I don't even know what to call it. This diagram is applied across all time frames, just different candles. So in a different number of candles. So in one daily candlestick, you will see this happen, but instead of 4 candles, it will be 6 candles. And one 4-hour candlestick, you will see 4 1-hour candlesticks. And if this was a 1-hour candlestick, you will see 12 5-minute candlesticks that show you this how that hourly candlestick closed. So the lower time frames tell you how the time frames, how the lower time frames tell you how the higher time frames will close. So me as a intraday trader, I am trying to catch the overall move of the market, not the intercession volume. Okay, it's important to note that I am looking to catch the whole entire move of the market, not just the move that's going to happen right now. Okay. Also, I'm also trying to predict how that daily candlestick will close. So, reset chart. If I'm looking at this daily candlestick right over here, and I'm looking to trade this, I am anticipating that this daily candlestick will close a certain way, depending on how the lower time frames are forming. Let me know if y'all follow me so far. Y'all got me? Y'all catching my drift? Are we making sense? Do I need to clarify something real quick before I continue? How do you know when to enter or what's a proper retest? I'm going to get to that, Oliver. I'm going to get to that in a second. But I use the 5-minute chart. Alright, so when I come to the chart, I'm looking. I'm asking myself, are we making new highs or new lows? In this case, we're making new lows. How do I know we're making new lows? If I just follow the candlesticks with my line tool, you have it to every pivot point in price, or the significant pivot points in price, this is what I see. If I just move this tool from the actual candlesticks and look at it up here, this is clear as day, new lows. But if you see this, you will easily be able to tell this is new lows looking at this. But if you look at this, it looks a little bit more tricky because of the wicks and all that stuff. So ignore that and ignore the individual candlesticks. I don't focus on each individual candlestick. I focus on the story that the candlesticks are telling me as a whole, not one bearish candlestick or one bullish candlestick. Looking at all of them. So I come to the conclusion that the daily time frame is making a new low. How do I know that? Because we have a high, a higher low, a new higher high. This push down end up taking out this low. So that lets me know this is one bearish candlestick or one red crayon in the bag. Go to 4-hour time frame. And now I'll do the same exact thing. Now I just get more close to current price. Are we making new highs and new lows? We're making new highs. You might be wondering, well, how are we making new lows? You just said we took out this low. Yes, but on a daily time frame, you don't see any significant lows or highs here. If I go to the 4-hour time frame, you will see that there is actual structure, because 4-hour time frame tell you how the higher time frame will close. So 4-hour time frame, you see we have a low as we took this low here, a lower high, a new lower low, and the same exact thing happened. We took this high. So our 4-hour time frame is making new highs. If I just use my line tool and I mark off all of these pivot points and I put it at a blank space in the chart, you will see this. This is clear as day. We're making a new high. If I just look at this price action here, that's me ignoring the individual candlesticks and looking at the whole story as a whole. So a 4-hour is making new highs, blue crayon to the bag. So daily time frame making new lows, 4-hour time frame making new highs, one red, one blue. Now we go to 1-hour time frame, same exact thing. Are we making new highs or new lows? That is the question I'm asking myself. Now I'm looking more detail on this price action here. I come to the conclusion we're making new highs. Might be wondering, how are we making the new highs? Because if I follow this price action with these pivot points, boom, we made a new low. Just push down, made all of these lows, right? This was the highest point of the price before we make a new low. So I follow that with my mouse, make a line here, and ask myself, did price ever break above this high? Yes, price broke above this high. It did. Now that I know that price broke above this high, that lets me know that we are making new highs. This is just a retracement phase of an overall bullish push. Very simple. Cool. So now, when I was making new highs, I came to that conclusion. Now let's little recap. Daily time frame, are we making new lows and new highs? Daily's making new lows. 4-hour time frame, new lows and new highs. 4 hours making new highs. 1-hour time frame, new highs, new lows, new highs. So back to my analogy. Daily is bearish, 4 hours bullish, 1 hour is bullish. Daily is one bearish crayon in the bag, 4 hours one bullish crayon in the bag, 1 hour one bullish crayon in the bag. Knowing that you have 2 time frames telling you to buy, 1 time frame telling you to sell, ideally, what would you want to do? Buy or sell? That's all you need to know. Do you want to buy or sell, knowing that there's 2 bullish time frames and 1 bearish time frame? You would want to buy overall, because buyers are in control, and that is the higher quality trade, because you have more time frames telling you to buy. Very, very, very simple. That's just me picking direction. Now I'm picking where do I want to buy at is key as well. I need to know where do I want to buy at. And then I know I want to buy, I have to find out where. I don't want to just buy at any given point in price. I don't want to just buy now. I don't want to just buy here. I don't want to just buy here. I don't want to buy here. Like, I have to pick an area where I want to see price go before I look to take a buy. And you might wonder, how do I find an area? I look at major key levels. And you might wonder, what major key levels were you looking at? Or how do you find major key levels? Simple. I mark off the current high, meaning the current highest points price went on the 1 hour time frame. Where's my current high on 1 hour time frame? This high all the way up here. Okay? That's one key level. The second level I look at is my previous high. Very simple. Where was the highest point that price went before this high up here? Structure wise, would be this high here. Now you might be wondering, why am I not using this high? Because this is the most recent high that gave us the structure shift. We were bearish here. The fact that this high is the high that that made us go from bearish to bullish is my most recent high. Not this high here. This is not most recent, because this high happened before this high. This is the most recent one. Alright? That's what I see. Then lastly, what I mark off is my most recent low, meaning the lowest point price went before making a new high. This is my new high. I want to see the lowest point price went before making a new high will be this low all the way down here. Boom. Easy peasy. All my key levels is drawn up. Current high, previous high, current low. So when you first hop on, how do you set your yourself up, what do you look at first to get your day going? First, I look to tell whether I want to buy or sell overall for the rest of the day. Do I want to buy and sell, and where do I want to buy or sell at? This is how I got my key levels. If I just right click reset chart, you will see that my key levels are pretty accurate. This is how easily accurate it is to draw out key levels. Mark off your current high, your previous high, and current high low in a 1 hour time frame, and look left. I look left at this current high. We have previous rejections here, meaning price rejected this area previously. I mark off my previous high again. Previous rejections here. We got a rejection here, rejection here, rejection here, all off this same exact level. Rejection here, rejection here, and then my current higher low. Rejection here, rejection here. Let's look more left. Rejection here, rejection here, rejection here, rejection here, rejection here. And that's how I find my key levels. But again, let's go back and recap. I said I want to buy overall. This point of my trading strategy is to pick where I want to buy in. So ideally, I would have been looking to buy here. I will mark off the highest wick to the lowest body. Extend it left and right. Mark it off as a level of support resistance. Extend it left and right. Boom. I would have been looking to buy here for this break and retest. We got the break and retest. Right? I like to say, if the retest is too aggressive, don't trade it, because 9 times out of 10 it's a fake out. So I enter on a 5-minute time frame. Once I seen the retest, I would have went to the 5-minute. Right? Let's look at the 5-minute chart. Again, this retest is too aggressive. There's no clean structure. This is constant chop, 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 chop. Seeing this chop, I don't want to trade this kind of price action. My retest has to be clean. If it is not clean, it's probably going to be a fake out. So simply looking at this as a fake out because we are too choppy, I don't trade that off of that level. So this retest failed. My second buy opportunity will be if we make a new high. If we get a break and retest of our current high to make a new high. Right? That's it. It's literally it. That's how I trade. In a nutshell. Then again, I go to find targets. How do I find my targets? Where do I want to look to exit? I want to look to exit at areas that price previously rejected. So if I was to take a buy off of this area, I want to take some of my position off at this high because price previously rejected this high. Price could easily just come up here, create equal highs, and then reverse. I don't want to let this high take my profits, right? And that's my most recent current rejection area. If I buy above this area, my price doesn't have a new rejection area until we get all the way up here. This is the better trade because we have all this clean candles to fill. This is a lot of imbalance that has to get filled. The market's not going to drop forever. The market's not going to go up forever. So whenever you see a impulse in one direction, that area is going to get filled eventually. So if I could take pro trend buys above this high, I can look to target these highs up here because this area hasn't been filled just yet. Simple. If I look to take this buy, I can look to target this high because this is our next rejection area. But above this high, my next rejection area, looking left, is not until price come all the way up here, or we can look at this area here, or this area here, because these are all areas that price has been rejecting. It's very simple. And if price doesn't continue higher and continues to fall, guess what? I just don't take a trade because those sales are counter trend to the overall higher time frames. Doesn't mean the buys are going to play out. Doesn't mean the buys are going to happen right now. It could just keep falling. But back to the game analogy, it means though I gamify trading. I make it seem like a game of probability. Just because price keeps falling doesn't mean it's going to continue. It can stop and go bullish at any given moment. Using my analogy before, my Times Square game, knowing that it's one red crayon in the bag and 2 blue coins, that doesn't mean you're going to win every time you bet on blue. There's sometimes you're going to bet on red. There's sometimes you're going to bet on blue and red still wins. Because at the end of the day, it's a probability game. It could just be on that lower probability where it's just playing out on that red side. If I'm looking at buys here, because buys are more pro-trend to the 1 hour being bullish and making a new high, 4 hour being bullish and making a new high, right? That doesn't mean it's going to continue higher, right? It could just continue down and go bearish at some point in time. That's when you shift your narrative and go say, okay, now we're going bearish. I want to take sells now, but where would I want to sell? And do the same process all over again. So, looking at the 4 hour time frame, if we're making a new high, higher low, higher high, where does the 4 hour go bearish at? Technically, the 4 hour is still bullish. Where does it go bearish at? Below the most recent low or the lowest point, which will be this low all the way down here. So in order for me to sell, I wouldn't want to sell until price goes bearish, where I have more red crayons in the bag rather than blue, letting me know that it's a higher chance for me to win on the sell side rather than the buy side. At the end of the day, trading is a game of probability. Knowing that it's a game of probability, you want to only be on the side of that has the higher chance of winning. The market can either go up or down. There's no in between, right? Market can either go up or down. So, all you have to do as a trader is to be on the right side of the market when it's going up or down. If you are on the right side of the market by chances of probability and you still lose the trade, it's because your entry was off. Your direction was right. Your sense of direction is right. You were clear on knowing where we were going to go based off of price going to your target, but you just got stopped out first. That means your timing was off. You got a bad entry. That's it. And it's easy to improve once you know what you're doing wrong. So if you got a bad entry, just refine your entry criteria. Wait for closures next time. Whatever, instead of using the 5 minute, use the 15 minutes. Instead of using 1 minute, use the 5 minute. Just refine your entry. But again, all you have to do is be on the right side of the market most of the time. If you're still wrong while being on the right side of the market, just refine entry. That's it. Hopefully that makes sense. So when you first hop on how do you set yourself up? What do you look at first to get your day going? So yeah, I think I answered that question. I look at whether I want to buy or sell on the day based off of the daily, 4 hour and 1 hour. I look at all of those time frames to see are we making new highs or new lows. Once I establish we're making new highs or new lows, I only look to take trades in a direction that supports that daily 4 hour and 1 hour buys, or that overall daily directional buys on if we're making new highs and new lows. Very, very, very simple. That's why I say all the time I have the simplest strategy to trade. Literally. All I do is pick a direction and then I mark off my current high to 1 hour time frame, previous high to 1 hour time frame, current high or low. And I only take trade support my directional buys off of those areas. That's it. I don't need to wait for manipulation. I don't need to wait for an inducement. I don't need to wait for a fucking liquidity sweep. I don't need price to do none of that extra fancy shit that you hear all the time. I keep it simple as possible. That's it. The more complicated the trading strategy is, the more shit you gotta look out for. And I don't want to be looking out for more shit. Based off what I'm waiting for right now is my position I'm waiting for is buys on GBP/USD. I want to wait for a break and retest. We already got the break, being that we had a closure above these previous highs on the left hand side. Now I just need to retest. So I need to retest on a 5 minute chart. In order for my retest to play out, I need price to first take out a low as it's coming down to break and retest, and I need it to have structure. If we come down, take out this low right over here without making a lower high and a new low, no trade, because that means this retest is too aggressive. 9 times out of 10, when you have a retest that is too aggressive, it's going to be a fake out. And I can break down some previous trades to get you to show you. So every trade I take on live. If I take a trade outside of the live stream, I will send it in a Discord, right? Inside my Discord. If you want to join my Discord, send me a message on TikTok. I'll send you the link. It's free. I don't sell anything. I don't sell courses. I don't sell signals. I don't sell mentorship. I don't sell nothing. So if you want to join Discord, just send me a message. I will send you it. I don't gatekeep anything either. I make money off trading. I don't need to make money off of you, right? The reason why I live trade is to make trading not boring for myself. Because trading by itself is just boring. I like to talk. I like to explain stuff. So I don't delete my positions either. So if I take a trade, I can look left at any given time and see any trade I actually took on this pair. So being as though GU, the last time I traded GU was back over here. Alright, this is the last 2 trades I took on GU. I took a trade here on GU. I took a trade here on GU. I could do that for any pair I trade. So in NAS 100, last time I traded NAS 100 was back here. I took a buy. I don't delete my wins or losses. Alright, I sent you a message. I got you. So I don't delete my losses either. So if I take a loss, you will see it. I took a loss right over here in NAS 100. I took a win here. Took a win here. Took 2 wins here. Took win here, took win here, and that's 100. Same thing on gold. When I see gold, every trade I take, I don't delete. Took a loss here. This was last week. 2 back-to-back losses here on gold. Again, my directional bias wasn't right. Like, we still went bullets. We still tapped into the hideout targeting. My timing was just off. I took it. This was break even here on gold. Took a win here on gold. Took a win here on gold. Win here on gold. Win here on gold. Win break even here on gold. Win here on gold. Win here on gold. Right. This was a loss. So I'm gonna go over a trade that I taken on how I mark up my charts. So let's do this trade back over here on gold. Let's, hypothetically speaking, say I don't see none of this. Or anything to the right of this box I don't see. Start off on daily time frame. Wait, what box did I just do? I don't even know where I was just at. Oh, I'm doing it sales over here. Okay, so off on daily time frame, this is what I saw when I took this trade. I asked myself, are we making new lows or new highs? That's the question I asked. The answer was to the question was we're making new lows. How do I know we're making new lows? Because we have this high over here. This is the lowest point before making a new high. This low got taken right over here. With this wick, let me know daily time frame making new lows. Do the same thing on the 4-hour time frame. Are we making new highs, new lows? Remember, pretend I don't see anything to the right. So this is the only thing that I see. 4-hour time frame. Are we making new highs and new lows? I said new lows. The reason why I knew we were making new lows is because we took these lows here. Again, new lows. Daily was, that means 1 red crayon on daily, 2 red crayons on the 4-hour, go to 1-hour time frame, and I did the same exact thing. Ask myself, are we making new highs or new lows? Look on the 1-hour time frame. Remember, I don't see all of this stuff here. I said new lows. Reason being is because price took this low right over here, price took this low right over here, and we had an impulse down. All I did was waited for a retest. We got the break, the retest. It happened. I missed this opportunity. Just because you miss it don't mean it won't set up for later on. So I waited. Again, I did the same exact thing. Are we making new highs and new lows? Price made new lows. Reason being, we took this low right over here. I just simply waited for price to pull back. So I mark off using my 1-hour time frame, how I did before. I mark off the current low, which would be this low down here. The previous low, which was this low right over here, and the current lower high. This is the boxes I was looking at. Okay, this was the zones I had. I had this marked up, this marked up, and this marked up. Price pull back into this area. Once price pull back, first. Okay, before we get into the pullback, let's talk about the break first. First, I need price to give me a break in a 1-hour closure below this lows here. So the break of 1-hour closure didn't happen until this candlestick right over here. Just because I seen this candlestick don't mean I FOMO in sell here. Don't mean I FOMO sell here. I don't FOMO in. I literally trade the same exact way every single trade. Break, retest, 1-hour closure. That's it. I don't give a fuck where the 1-hour closure. If it closed here, I would have waited for a retest. If it closed here, I would still have waited for a retest. If it closed here, I would have waited for a retest. Unfortunately, this candlestick closed deep down here. But I still waited for the retest. Right? And like I said before, my retest need to have structure. If there's no structure, if it's too aggressive, if it's not forming higher highs and higher lows on that retest, I don't trigger it because it's going to be a fake out. So, well, there's a high chance of being a fake out. So, down to the 5-minute time frame for entries. Let's go to the 5-minute chart. Let's go back to where that trade was actually at. I look at the retest. Boom. This is what I see. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Boom. The retest has to tap into the level first. Once it taps into my level, then I start to look at potential entries. Okay. Now, I was waiting to take a sell here. This is my original sell idea. I was waiting to take a sell here. I didn't take this sell here because we made a new high. How do I know we made a new high? Because price took this high over here. Boom. Price took this high. I did the same exact thing. Higher high, higher low, higher high. Boom. Then I had a sell limit here. Same exact thing. Price made another new high. It just kept making new fucking highs. Right here. Boom. Once it made this new high, this is my current higher low. I just trailed my entry. because I use buy stops and sell stops from here to here to get triggered. Price eventually came down, took this low in a 5-minute chart, rejecting this area, right? I got my entry at this, around this area right now, right here. Spread, when I actually took the trade, spread put me in at this price point, right? But stop loss above the highs. Stop loss was also above the 1 hour high. So if I go to 1 hour chart, let's look all the way to the left hand side. Okay, let me backtrack a little bit. When I take a trade based off of 1 hour closure, my stop loss has to be above that 1 hour candle high. So where the trade go? Where the trade go? Where the trade go? Where that trade go? Where that trade go? It was here. Okay. So because this was my confirmation candle that confirmed that we were on a breakout phase, my stop loss has to be above this high. So my stop loss, I wanted my stop loss to be above this high, but I see we got faked out here multiple times, so I wanted to give it some breathing room to keep it above all of these highs. That was a trade. Got triggered in the back over here, and then sprint some drawdown. Price created some relatively equal highs here. Still rejected this area, and then I look to target this area down here, my first target, and then I had a further target down here for about a 1 to 4 risk reward. So that's how I trade. And then same thing back over here. Like when I took this trade over here, same exact thing. This was a break-even trade though. But again, when I came back to the chart, I overall wanted to sell overall because I'm still in the sell. I mark off my current low, my previous lower high, same exact thing. Got a break of this area. Break, retest. The retest came with a 1 hour closure below, back right over here. Decided to take myself, stop loss above these highs. Look to target these lows. Price came a little bit in profit. When it stopped to break even, it reversed. Came back to break even. I got out the trade, and then it overall reversed on me, so it was a good break even. This was the out of pocket question. What brokerage app is more recommended? That's not an out of pocket question. That is a good question because it's a lot of brokers to choose from. So if it's a lot of brokers to choose from, you don't know what to pick. But it's if you want to take the slow growth route, so with safety, meaning you don't get scammed, go with a regulated broker. If you are looking to make a lot of money quick but could possibly get scammed, go with an unregulated broker. That's about the simplest way I can put it. Now there are example of regulated Owanda. And okay, if you trade Forex and you go type anything in here, like say I type in like gold, XAU, USD. All of these names you see here, these are all gold. Wait, XAU, USD. Okay, all these XAU USDs, these are all gold, and these are all different brokerages that's supplying that chart. So Owanda is a brokerage, Forex.com is a brokerage, FX is a brokerage, Pepperstone is a brokerage, FX Open, IC Markets, Vantage, 8Cat, Pith, Sexa. These are Black Bull. These are all brokerages that are regulated because they are on TradingView. So regulations just means legal reasons, right? So if you deposit a certain amount of money, well, if you deposit money in a regulated broker and then you request a payout and they don't pay you any money, you can sue them for that amount that you're requesting to withdraw because that brokerage have regulation that they have to follow, right? It's against the law to scam. But if a broker is unregulated and is offshore, they can scam you without, they don't have to acknowledge your payout because they are unregulated. And it's your fault that you didn't know that they were unregulated in the first place. So if they want to deny a withdrawal, they can do that and there's nothing you can do about it. That is the difference. So if you want to take the risk of getting scammed, go unregulated. But the benefits of going unregulated brokers, you get more leverage. Meaning you get more trading capital for your actual dollar when it comes to leverage. Regulated brokers give you less leverage because they're regulated. So if you want to make a lot of money fast, go unregulated. If you want to take the slow growth and a more safe route, go regulated. And as far as regulated broker recommendation, I will go Owanda. As for unregulated broker recommendation, I will go Coinex. It's a brokerage called Coinex. COINEXX. Make sure it has 2 X's and it looks like this. It should be gold. This is the broker that I use on my personal account. It is unregulated. I'm not saying don't trade unregulated brokers because I use an unregulated broker. But I had never been denied a payout with Coinex specifically. So take that with a grain of salt because if they scam you, don't come blaming me saying they scammed you. All right. They just acknowledge, they give me my payout, so I don't have no problems with them. But when I first used them and I requested a payout on CoinNext, they did ask me a crazy ass question in the email. They did ask me a crazy question. I requested like a $700 withdrawal from one of my accounts on that broker, and they emailed me like, yeah, we received your withdrawal request. Why do you want to withdraw? I'm in my head like, nigga, do I gotta tell you why I want to withdraw? Bitch, it's my money. What the fuck? But they end up acknowledging my payout, and they actually gave me my withdrawal. But that was a red flag, low key. That was definitely a fucking red flag. But they still gave me my payout, so I didn't give a fuck. So I just kept trading. If they would have denied that payout, though, I probably wouldn't have traded with them no more. But I actually definitely wouldn't have traded with them no more. Yeah, it's not out of question though. That's actually a good question. Then yeah, a little sketch, but for sure. Thank you. I'm gonna go regulated for security. Yeah, definitely regulated for security, but the only difference between regulated is you get less leverage. Meaning, you could trade bigger size with unregulated brokers. You can get like a 1 to 100, 1 to 500 leverage. But the sketchiness when it comes to unregulated brokers, if they start offering crazy shit, like if they say 1 to 1,000 leverage, they probably not gonna pay you out, my nigga. Like, not even gonna lie. 1 to 1,000 leverage is crazy. So, but if you're somebody with not a lot of capital, you can go. I would say go unregulated because you can actually make money and flip accounts with unregulated brokers. But if you already got a lot of capital and you want to be more secure, more safe, go regulated. All right, no, I'm not in teacher mode no more. Let's go back to the music, bro. But yeah, Justin, that's the example of how I trade. I go direction first. Once I establish direction, I go to my levels on where I want to trade at that supports that direction. Mark off my current 1 hour high, previous 1 hour high, and my current 1 hour high or low, and I look to trade off of those areas that support that direction. When I don't shift my directional bias until the 4 hour goes flips as well. How long have you been trading? I'm barely getting into the research. I've been trading for 4.5 years, almost 5 years. I've been consistently profitable and making withdrawals for the past 2 years. Yeah. And I normally live trade every single day. So the trades that I do take on my personal account and my funded accounts, I take them all on live. Like, I don't sell signals because there's no point in me selling signals if I trade live. Like, don't make sense. Like, why would I make people pay for something I'm doing for free on TikTok anyways? TikTok and YouTube both. That makes more sense. How brokers make money? Okay, brokers make money off of the losing traders and the commissions. Think about this, Oliver. If 97% or 95% of traders fail, and 95% of traders losing money, that's where they're making money from. The 95% that's losing. Really? Can you explain 1-to-1? Sure, I can explain 1-to-1. 1-to-1 just means your reward is equal to your risk. So if I'm risking $1,000 and I'm flowing $1,000 in profit, that's a 1-to-1. Meaning 1 is equal to 1. 1,000 is equal to 1,000. If I'm risking $200 and it's flowing $200 in profit, that's a 1-to-1. Any advice for beginners? Beginners, I would say watch people that live trade. You can get some value from videos, but from watching YouTube videos and stuff like that. But I would say the best advice I can give you is to watch people live trade because you see the real raw reaction and the reality of trading. It's easy to give you a technical analysis. Anybody could break down a chart in a video form and pick and choose what they upload versus what they don't upload. Like, you may see somebody make a video on them catching a 1-to-5 risk reward trade and post that video, but you didn't see how many times they tried to record that video and lost that trade. So you don't see the reality of trading with just videos. You may see good quality content on videos, but at the same time, you don't know how many times they failed that video. just for 1 to 5, they probably lost that trade 6 times. Like, so netting in the negative, because if you take 6 trades, risk of 1%, you lose 6 times just to hit 1 to 5. You still net minus 1%. So, advice I give to beginners: watch people that live trade, because you get the full transparency of trading, not just the flashy or the entertaining stuff as far as YouTube wise or TikTok wise. Also, with people watching people that live trade, you see they before, after, and during. You see what they look at before. You see what they look at when they first come to the chart. You see what they look at after the trade is over, right? You also see the during on how they're managing emotions, how they're managing trade and drawdown, how they're picking their targets. You see if they're over trading or if they're getting emotional. You see the real side of trading, not just the good shit. You see if them, oh, we up 500. They get excited, or they get sad when they like, damn, I'm about to lose. We down 500 or whatever. Like, you see the reality of the emotional side of trading, not just the other side, like the technical part. And in trading is majority emotion. Anybody could. Trading is so diverse until it's a lot of different strategies that all make money or that's all profitable depending on who the person is. But if your emotional side isn't intact, then you're going to have a hard time. So anybody could break down a chart as far as technical analysis and make money. Sometimes make money, not make money overall, but make money sometimes. Meaning win a trade. But if your emotional side is not intact, then you're not going to be making money on a long-term basis. So being as though the emotion and the psychology side is so heavy when it comes to trading, I would say watch people that live trade, because you get that raw reaction. How much you make a month? I'm not telling you that, bro. What are you, fucking IRS, my nigga? Like, what the fuck? You still work a regular job, or is it your main thing? Trading is my main source of income. Been thinking of going all into learning. You're trading my main source of income. I make a majority of my money from trading. Hey, preach. That was crazy. I'm talking about how much you make a month. That was crazy. I'm trying to see how much 5 years of trading will get me. Everybody's journey is different. You can't expect my results from. You can't expect my experience to get. Damn, fuck! I can't talk, bro. I'm finna get pissed off. Why can't I talk? All right, you can't expect my journey to look like yours. Everybody's journey is different. Right? It's people. I know somebody that's been trading for 15 years and still unprofitable. Right? So just because 5 years doesn't mean. I know people that have been trading for 5 years as well as me that make way more money than me trading. Give me a range of what you make. I make enough to pay my bills trading, strictly trading. Comfortably. That's enough. Does how much you get taxed depending on how much you earn. So okay, let me pause the music before I say this. This is not legal advice. I'm not an accountant. I am not a tax attorney. No, I don't make that much, gang. I'm not rich now. Well, 100K a year is not rich, but no, I don't make that much. But how much you get taxed? Okay, yeah. So I'm not a financial advice. I'm not an accountant. This is knowledge off of my personal experience. Do your own research. I am not responsibly legal for anything that you do with your own money when it comes to trading. So don't say Traderholic told me so and try to sue me in court, because this is not financial advice. Okay, disclaimer. But to answer your question, as a trader, you don't pay regular taxes. You pay more taxes than the average person, because you get taxed with something called capital gains tax. So you get get taxed at the end of the year once you report your income. But you get taxed more as an independent trader than you do trading as a business. So once you become profitable, open up an LLC and a business account and all that kinds of stuff, and operate out of a business sense and not a personal sense, because you get taxed more as a person than you do as a business. But you get 60% of your gains should go to taxes. Well, it's supposed to go to taxes, because you get a 60% capital gains tax. That's what it's called. Do your own research. Look up 60% capital gains tax, and there you find the answer. Doesn't taxes change also depending on where you live? Yes. What's the best prop firm to use? I don't know the best prop firm to use because I haven't tried every prop firm, but the prop firm that I use is Alpha Trader and Top One Trader. 60%, goddamn, yeah, 60% is a lot. That's fucking crazy, but that's part of being a fucking trader. 60% capital gains tax. That's why a lot of traders move to Puerto Rico like TJR, because that 60% capital gains is crazy. 60%, goddamn. Is Top Step a good one? I never tried Top Step. I trade Forex. Top Step is a futures prop firm. I don't technically operate strictly futures. I trade Forex, but NAS 100 is like a future. I do trade the Nasdaq, but I operate the Nasdaq out of a Forex prop firm and not necessarily a futures prop firm. Nah, you don't get. Nah, you get 60% capital gains tax off rip. Even if you only netted $100 that year, 60% should be going to taxes. And if you ain't paying your taxes by the end of the year, when it's time to file them hoes, and the IRS catch on and they catch up to your ass, bro, just know they coming. They might not come that same year, but let you start making some real money. They gonna be like, hey, I see you ain't pay taxes on capital gains as a trader in the past 6 years. Where our money at? Have you made an LLC yourself? Yes, I operate under a business name, not my personal name. It's important, but you want to do that once you start making a decent amount of money in trading because you get tax write-offs. So I can write off a portion of my rent as a tax write-off, as a tax expense because I work from home. So my room is considered my office is considered a tax write-off because I operate from home. The money that I spend for marketing or editing or like for somebody to edit a video or marketing as far as like running ads and all that kinds of stuff, if I wanted to operate like that, those are all set a tax write-off to give you a break, to reduce that 60%, to give you a tax break. But ideally it's 60%. Yeah. If I travel and I go somewhere for like a meet and greet or something like that, that's a tax expense. Like that's a write-off to get a couple tax breaks. How much should you make before creating an LLC? And is an LLC hard to make? No, LLC is hard to make. Not hard to make at all. Of course, again, disclaimer: I am not a legal advisor, not a financial advisor. This is just my personal experience with this topic. Okay, but no, LLC is not hard to make. It just depends on what state you're in or how much it actually costs to make an LLC. I think for my state it was $125 to form an LLC, and then the EIN number is free. You just go on your governmental website based off of your state, and you get an EIN, and then you open up a business bank account, and there's a couple other steps that you got to do to make it to register, because you got to register your LLC as well. You can't just make one; you have to register it. That's another fee. And then when it comes to open up a prop firm and stuff like that, you don't use your name. You select as a business and not as you. And then as you request withdrawals and things like that, you withdraw to your business bank account and not your personal name, so it can all get tracked as a business, and you don't gotta pay them taxes personally. What stock do you mainly trade? I don't trade stocks at all. I mainly trade the Forex market. So anything you see here to the right hand side is anything I trade. But I could give you an accurate prediction on price as far as a stock or crypto or any kind of other financial asset, because I trade per price action. As long as I just explained how I trade, but as long as the market has clear highs and clear lows, I can accurately predict price, because every financial asset has highs and lows and Japanese candlesticks. So it's not nothing that I can't give you an accurate prediction on. The reason why I don't trade stocks is just because I have success with these pairs here, so no point in me trying to diversify. Alright, turn the music back on. Oh, somebody said something about my Discord. So this is my Discord right over here. Where you learn from? I learned from YouTube, and then I learned from YouTube to start. And I eventually went and bought a mentor. I paid for a mentor. My mentor was Dr. Dollar. If you go on YouTube, search up Dr. Dollar. That was my mentor. Do you own any long-term investments like stocks or real estate? No, I do. I am in crypto though. Here's my Discord. Let me pause the music again. Damn, this is the last time I pause the music. I promise. You recommend trading during New York? No. Reason why I don't recommend trading during New York is because I don't trade news, and a lot of the USD news happens during the New York session. That's why I trade London specifically. I don't have to worry about FOMC or Powell speaking or tariffs and all this other shit that's happened during the New York Open. That stuff not happening in the middle of the night, so I don't got to worry about that affecting price. I can trade pure technical analysis and don't have to worry about fundamentals. But here's my Discord. Inside my Discord chat, I'm pretty active. If I tweet, I said tweet. I send a message when I actually go live, as far as like a link to an announcements. I would say I'm live trading here, whatever, boom. Also talk in a general chat room. I send my trade breakdowns and stuff like that, before and after. So like this was the trade I took on USD JPY, before, after, and I also let people know how I'm managing my trade. I mean, I'm taking parcels here. I do all that stuff in the general chat. If Justin, I'm gonna send you the link. Just send me a message. I think you said already sent me the link. I'm gonna send you the link though before I get off live. Well, when I get off live. I also do one-on-one coaching. I do one-on-one coaching once a week. One-on-one coaching. So as you can see down over here, here was a poll. Well, not that poll. So here's a poll. Do you want to be part of the one-on-one coaching? You vote yes or no. Whoever votes yes, I will pick somebody randomly. Well, not randomly. I'll pick the person that I see inside the TikTok live or YouTube live the most. If I see your name popping up the most, I will pick you to do a one-on-one coaching. The one-on-one coaching is completely free. It will be on a weekend. Or if I miss a weekend, I will do it during the week if I miss the weekend. So one-on-one coaching is completely free. The reason why I want to do it is just to give some more value to the community on my free time, right? That's really it. So yeah, this was Friday. Who wants a one-on-one session? 5 people voted yes. 5 people voted me. I picked K. Shoot me a DM. He sent me a DM, and we discussed the time to set up for the one-on-one coaching. So yeah, if you want one-on-one coaching with me, or like a one-on-one session to where we go over everything in detail, this is what we're going to go over. One-on-one coaching call, free spot, what's good, what you'll get, a live chart review of your trades, your wins and your losses. So you must journal your trades, so we can go over your trades, what you did good and what you did wrong, or what you could have looked at to, as far as like improving. I will give you a breakdown of my strategy, same thing I do on live, right? And areas to simplify. Help building your trading routine and trading journal. So I'll help you build a routine and journal, because again, like I said before, I do the same thing every single day I get on live. Every single day I hit the charts, I trade the exact same thing, exact same way every single day. So I'll help you build a trading journal and routine, because that's important. I show you my exact approach to support resistance plus breakouts. I do that on live anyways. But you actually can interact and ask questions instead of typing in the chat. Mindset and discipline advice, entry, patience, emotional control. So I talk a lot about emotional and psychology. We can go over a segment on that as well. And you get a chance to ask me anything fully custom to you. So, yeah. So on Fridays, I send a poll. Every Friday, I send a poll. And if you want to be inside of one-on-one coaching, I'll do one every week. And I'll pick whoever I see that votes in the me side, and who name I see in the lives the most, because I know that they are serious and they actually want to learn some value. I don't want to pick somebody that's not really here, because again, I would look at them like they're not really trying to learn shit. They're not even showing up, right? So I pick like that, and then on a Saturday or Sunday, you could just send me a message. You end up sending me a message, and we schedule a time in a day to do a one-on-one coaching call, and it could last however long it takes for you to understand what I was teaching. It could be 1 hour, it could be 2 hours, it could be 3 hours. I don't give a fuck, right? It's not gonna take that motherfucking long though. But I make sure before we end the call that you understand everything, and by the end of that call, I will give you something to attack that upcoming week. So like to focus on. So I would say something like, all right, this week let's focus on your risk management, or this week let's focus on your psychology, or this week let's focus on only taking 1 to 2 trades a day if you're somebody suffering from over trading. Or this week let's focus on this, and then I want you to track those results, and then that following week I will check up on you that next Friday, like, hey, how did you go with this, or how did this go? I remember Monday I told you to you should be looking at this. How did that go? And to give you like a little checkup to see how everything went after the call. So if that's something you want interested in and you want to join the Discord, just send me a message on TikTok. I will shoot the Discord out. All right, but yeah, I sent the message. I got you, Justin. I'm gonna send you the link before I get off live. Are you recommend trading direction? I think I answered that already. I learned from TGR. Should I stick with his strategy or change because he's more of a content creator? If you trade in TGR strategy and it's working for you, like you understand it, and you just have to refine it, or like if you understand it and you're still unprofitable because there's other stuff like your psychology is messed up or your risk management is messed up and that's why you're unprofitable, then stick with it and just focus on the emotional side and the psychology side of trading. If it's just not working for you and you're only taking 1 to 2 trades a day and you're only your psychology is good, you're not over trading, you're not over leveraging, you're not over risking, it's still not working for you, like you just don't understand it or something not clicking, find something else or something more simpler. Do you have any tips on how to stay consistent? Routine. Build a routine and do the same thing every single day. And that will become consistency. If you're somebody that's taking 5 trades on Monday, 2 trades on Tuesday, 6 trades on Wednesday, 1 trade on Thursday, of course it's going to be hard to find consistency because you're not being consistent. In order to find consistency in trading, you have to find consistency in your trading. Meaning, if you want to find consistent profits, you have to do the same thing over and over and over again. Take the same setups, the same strategy, the same day, the same amount of times. Like, that is going to make you consistent. You can't find consistency when you're doing random shit. Everything works for me, both sides, mentally and physically. I'm just scared to start a funded and blow it. Don't be so. This is the advice I get to people that want to trade funded accounts, because a lot of people trade funded accounts and don't even know if they have what it takes to pass a funded account, so they end up donating, right? You shouldn't be taking nobody, and this goes for everybody. Nobody should be taking a funded account if you don't know you have what it takes to pass a funded account first. You have to be able to prove you have what it takes to pass a funded account before you can go buy a funded account. It's not funded account top step is cheapest. Yes, okay, $50 for a funded account is cheap, but if you don't know you have what it takes to pass a funded account and you pay $50 and you fail it, you're gonna keep paying $50, and then you're gonna go a month later and be $500 deep and funded accounts blown because you didn't even know if you could pass the first one you even took. That's the problem. People who pay for funded accounts looking at it like it's only $50. Next thing you know, they 20 challenges deep and now they down a band. So, before you take a funded account, you have to prove to yourself you have what it takes to pass a funded account first. So, to do that, open a live account of your own personal money. It doesn't have to be a big account. I recommend $100 to $200 and trade that $100 to $200 first of your own personal account. Now, you're not looking to take a $200 account to 1K. You're not looking to take a $200 account to 5K or 10K. You're not looking to actually make money on that $200 account. You're looking to get better and improve as a trader and track data. The $200 account is for you to track data and figure out what are your weaknesses, what are your strong points, how big of a risk reward do you normally go for, shit like that, right? You want to take that $200 account and apply proper risk management, right? Also, before you even get into the $200 account, you want to go to the prop firm that you're actually looking to trade on, right? Go over their rules before, or what is considered a hard breach of account. Like, what is considered blown account? Figure out those rules and take those rules to your own personal account and follow them. So if Top Step has a 10% profit target, try to make 10% on $200 while only risking 1% per trade. Don't try to full port the shit and then make 10% and say I did it, because you're not going to go to a fund account and full port to make 10%. Like, that's not the reality of trading. So if your profit target is 10%, try to make 10% on $200. If your max drawdown is 8%, try not to lose 8% on $200. If your max daily drawdown is 4%, don't lose 4% on a single day on $200. All of the rules that apply to the funded account, apply that same rules and dynamic to your personal account. Once you consistently make 10% on that $200, which is a little bit of money, 1, 2, 3 times in a row, then you know with confidence that you have what it takes to make that profit target on the funded account because you already did it. All you have to do is purchase a funded account then and just do what you already been doing. So it's not going to change anything.
Only thing changes the size of the account, not necessarily your strategy, not your risk management, not your psychology, because you're already confident in the strategy because you already did it 2-3 times already. That is going to make pass a funded account a whole lot easier because you already proved to yourself that you could do it and you already did it consistently. Hopefully that makes sense. Yeah, I back this and I have a good win percentage, but everyone says with real money it's way different. Yes, real money is different. That's why I don't recommend anybody go into demo trading. Even if somebody's completely brand new, I never tell no. You could be my very 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 first student was my IRL, and literally I told a nigga don't demo, off rip. We went straight into the live market with his real money. We don't demo, cause again, if trading is 95% psychology and emotion, and you go into the market demoing, you disregarding the whole 95% of trading. Knowing that that's the most important, the majority of your trading journey is going to be about your psychology and your emotion and your risk management, right? To go into trading demoing, you're completely disregarding the hard part of it, and you're going straight into technical analysis when technical analysis is not the hard part. No, being able to take a loss, knowing what it feels like to make money, knowing what it feels like to lose of your actual money, knowing that it's coming out your pocket. There's no emotional tie to demo. So yes, it's different because it's different from seeing $100 drawdown on a demo account and $100 drawdown on your own money. It's a whole different ballgame. And still being able to hold that trade until stop loss. It could be $100 in drawdown and it's not even that stop loss yet. And being able to sit there and watch that shit keep going deeper and deeper and deeper and fucking drawdown without hitting stop loss. That takes a different level of discipline and emotional control to do that. Rather than just sitting it on demo money, it's not your money. You're not physically losing anything, so you don't really care. So yes, it's different when it comes to that. You don't have no emotional tie to it. Can I do what you're saying with a paper trading account or a backtesting account so don't waste money? It's not about wasting money. If you're scared to lose money, you're in the wrong industry. Even if you make money over time, you're still going to have your losses. Like for me, I make around 5 to 7% a month, right? Across all my accounts. So, but that doesn't mean I don't lose 1% or 2% from time to time. Like I still take losses. So trying to avoid losing is the inevitable. You're going to take losing trades. You're going to lose money. It's a part of investing. You think people that in real estate don't buy bad houses and net loss? It's about cutting your losses short, not about not losing. Exactly. So trying to avoid losing is the inevitable. Like it's something that you can't avoid. But you could cap how much you lose. That's why I said small account, $100 to $200. Even if you blow the $100, right? First of all, it should take you long. Risking 1 to 2% per trade and trying to flip. Not first of all, you're not looking to flip it. You're looking to make 10%. So to make 10% on $100 is only making $10. It's not hard to do, but it is hard to do when you use the proper risk management. So if you blowing $100 in a week, that's because your risk management is bad, not because your trading is bad. It's because you don't know how to properly allocate your risk management. If you're blowing $100 in a month, it's because your risk management is bad. If you risk 1% per trade and blow $100, that means you lost 100%. That means 100 losing trades with no wins consecutively will blow the account. The odds of you doing that is slim to none. Unless you're just fucking going in there full port and blowing the whole thing at one time. So it's not about trying to avoid losing money. It's only $100. Like it's not that big of a deal. It's people taking way bigger loss. Now it could be a big deal if it's like that $100 is important to you. Like you needed that $100 for something, or needed it for something. Like, then it makes a big deal. But don't ever put money into market that you can't afford to lose, because at the end of the day, the market is investment, right? Any investment could go sour. So don't rather invest money that you can't afford to lose. So if you could afford to lose $100, then put it in the market. If you can afford to lose 200, put it in the market. If you can afford to lose 500, put it in the market. That, I'm not saying go lose it on purpose. I'm not saying go in there and full port that shit either. Don't lose it on purpose. But don't invest more money than you can afford to lose. For some reason, I feel like the emotional part should be easy. Just have enough control to stick to your rules, and then don't touch your computer. Bro, Top Step got this feature on Top Step that says, "Oh, you can lock out your account." Nigga, real niggas like me, we don't gotta lock out, cause we just get off the computer. It ain't that big of a fucking deal. You know, you shouldn't. A prop firm shouldn't have to give you shit to make you disciplined. You should already be doing that. Like, oh, I just took two losses. Let me lock out. Like, you don't gotta lock out. Just don't trade. Like, what the fuck? It's easy. Just don't trade. So the emotional part sound easy until you actually see the drawdown or you actually see the profit. Think about this. You could enter a trade. It could be floating $100 in profit. Your TP could be $100. And then you see the $100 in profit. And then you also see that we still had clean candles to the left. It could go up even further than $100, where you could have potential to make even $300, $400, $500 on that same exact trade. You as a person, are you going to close the trade knowing that it has the potential to go higher, or are you going to close the trade at the TP? That's an emotional question. Like, damn, I could make $300 off of this if I hold. Then that shit don't go higher and it just reverse. Now you just lost. That's an emotional decision that you will have to make. Or, other way around, being a devil's advocate, it could hit your TP, which was at $100. Then you close, and then they go higher. You see it go $300, $400, $500 in profit, which it would have been, but you closed at $100. Emotional decision would be: do you FOMO in to try to get back in to take the rest of this move, or do you just say I'm okay with my $100 win and walk away and come back tomorrow for another day? Those are decisions that you will have to make as a trader when it comes to trading your own personal money. So emotions sound easy until you see the potential that your trades have while you're actually in it, knowing that you could close now or it can go further. Same thing with drawdown. You may see $50 in drawdown with a $100 stop loss. Are you going to cut that loss short, trying to manage risk and lose less than planned risk? And say you see $50 drawdown with a $100 stop loss, and you close at the $50 loss, and then it hits your TP. You're like, damn, I shouldn't have closed. I should have just held my stop loss. I would have won. Or a overall hits your stop loss, and you're like, damn, I could have closed at $50 and cut that loss short. Like, those emotional decisions that you're going to have to make in real time while prices actually fluctuating. I'm holding NQ longs. You in NQ longs? Let me look at NQ right now. NQ longs? You in longs down here? I can see it. I lied. I can't see it. I don't want to trade this price action. This range is shitty to trade. What's the main key emotional rules you stick to so moments like that don't happen? Do you stick to the rules you set? So I'm big on risk management. I'm heavy on risk management. So when it comes to my rules, I only take 1 to 2 trades a day. That's really it. Other than that, max I only lose 3 trades a week. I don't lose no more than 3 trades a week, because I cut my week short no matter when the losses occur. So last week, for example, I can give you a live example. Last week I stopped trading on Tuesday. That means Wednesday, Thursday, and Friday I didn't trade none of those days. I didn't even look at the fucking chart. I didn't even wake up during lunch. I didn't glance at the chart now one fucking time. I didn't even pull out my phone to pull up TradingView. I didn't look at the chart now one time from Wednesday, Thursday, or Friday. Reason being, because I lost 3 trades to open the week. Literally, my first 2 trades of the week, I lost all 3 of them, and I didn't trade after that. I'm going to show you the trades. This was the trade right over here. Remember I told you before, I don't delete my positions. The positions that I take, I leave up on the chart. Are those fees on time fee? One-time fee? Nah, Oliver. Those fees are not one-time fee. Top Step give you activation fees as well and monthly fees. So this was the first trade I took. Tuesday, loss, this trade. So I got stopped out right over here. Price came back to entry, closed back above. Give me a nice 1 hour closure above here. I waited for price to break that top wick. Took another buy here, stop loss below this low. Look to target these highs up here. Again, seeing some profit. Eventually, price reversed, created a higher low. I lost the trade as well, and didn't hit my target. So my directional bias wasn't wrong. Price did still hit my target, but it stopped me out first. Meaning my timing was just off. I lost both of these trades. That's 2 losses on Tuesday. Both of these on the same day. See, Tuesday. Okay, let's go to NZDUSD. I took a trade here as well. Took a sell down here. Lost. So these was 3 trades. Literally, I didn't trade Monday. I traded 3 times Tuesday. Monday, 2 on gold, 1 on NZDUSD. I lost all 3 of them. That's why you see there is no other positions here, because I didn't trade. Reason being is I cut my week short at 3 losses. No matter when those losses occur, those losses all occur Monday, they can all occur Tuesday, they can all occur Wednesday. They could be spaced out. I could win Monday and Tuesday, take a loss Wednesday, take 2 losses Wednesday, take a win Thursday, lose Friday, done. I could lose Monday and Tuesday, win Wednesday, lose Thursday. That's 3 losses in that week. I won't trade Friday. Worst case scenario, which was the worst case scenario, is what happened to me last week, where I took 3 losses by my first 3 trades. That is worst case scenario. I'm down 3%. It's easy to recover 3%. It's not easy to notice that you're in a losing streak and trying to revenge trade that and digging yourself in a deeper hole. I can recover 3% easily in that following week. That's it. If I was to try to revenge trade those 3 losses, and now next thing you know, I'm looking at 5%, 6%, 7% in drawdown, my next week, I'm going to be trying to recover 6%. Or that whole month, I'm going to be trying to recover 6%. That's too deep of a drawdown to try to recover. And when I could have just cut my week short and come back a new price action. Now again, the good thing about cutting my week short is whenever you cut your week short after taking 3 losses, by the time the next week come and you're trading again, the market is not going to be in the same area where you lost at. Meaning you're looking at new levels, new ranges, new price action. I mean, you're in a whole different market sentiment. You're in a whole different area. So, looking at NZDUSD, my losses here was on Tuesday. By the time I come back to the chart, which is today, I'm in a whole different area. I'm not trading this price action anymore. Now we're in this price action. Same thing with gold. Well, actually, we're still in the same price action, but we lets me know that I don't want to trade this level. That's why you see my areas for gold where I want to trade at. I want to trade above this area, below this area, because my loss in this area 2 times back to back. I don't want to trade this range anymore. I got fucking cooked here. This is an indecision level. There is no clear direction in this area. So I don't, based off of how I trade, so I don't want to trade this area no more. Whenever you cut your week short from taking losses, if you cut your week short, when you come back that Monday, price is going to be in a whole totally different area than it was where you lost. I mean, you're trading off of newfound levels, new reactions, new price action. Give you a fresh sense of market structure. So to answer your question, those like the main emotional rules that I hold myself to that protects my capital, because it's easy to recover 3%. And it's also easier to dig yourself in a deeper hole after you take 3 consecutive losses. They don't have to be consecutive, 3 losses in general. And mental note, knowing that I only have 3 losses to spare, it forces me to only take high quality setups, because if I don't and I lose early, I will have to cut my week short. And I don't want to cut my week short. That means I will miss out on potential other high quality setups later on in that week if I'm out the game too early. So that forced me to only take high quality setups, because I know if I lose, that's going to be a loss. That's going to be a strike. And it's 3 strikes, I'm done. So I got to be precise on and picky about which trades I take. To be honest, looking at gold on this loss, I shouldn't have took this second trade. But I took it anyways. But even though I shouldn't have took it and I took it, again, I still stuck to the plan with 3 losses a week. So actually I didn't even lose 3%. I lost 2.5%. Because I only risked 0.5% on the second trade. So I cut that risk down because I was already down 2% that day. Hopefully that makes sense. When you first started, you recommend prop firms or just using your own money? I recommend use your own money. Don't try to use your own money to flip it. Use your own money to just get reps and get the emotional feel to know what it feels like to lose or make money trading, rather you buying or selling, no matter what you're trading, and get the emotional control over, and just look to make 5 to 10% no matter what it is. So if you trade $100, try to make. If you're trading with $100, try to risk 1% per trade and make $10 a month. Don't look at it like you're trying to make money off of that trade, but just get used to knowing what it feels like to win or lose on a consistent basis and doing the same thing every single time. Even if it's $200, just look to make $20 a month, or whatever the case may be, consistently. Once you know you can make 10% a month consistently, no matter what your account size is, then you go to take prop firms because it'll make passing that prop firm easy because you already did it with your own money multiple times. All you gotta do is keep doing what you keep applying the system that you already built for yourself. That's a very good rule. I'm definitely do that. You explained that so well. Only follow up one follow up question. Do prop firms set rules for you to force you to trade? Yes. Prop firms make money off. Okay. This is goes on to the TikTok as well, because a lot of people on TikTok don't know the difference between A booking and B booking. Because I have like a lot of experience with trading. I've been trading for almost 5 years. A lot of noob traders don't know the difference between A booking and B booking. 9 times out of 10, 90% of the prop firms that you're trading for are B booking your trades. So you're not even the real liquidity. You're not even entering in the real market. Even if you are funding, you pass the XFA, you pass the verification phase and all that stuff, you are still not actually real liquidity. You're still getting B booked. So it doesn't even matter. Prop firms aren't, even if you make it to a payout, that 80-90, that 90-10 profit split, that 80-20 profit split, there is no profit split because that wasn't real liquidity. You wasn't actually trading the real fucking market. So that, say you make 10K on a funded account, that them trades was executed on an actual 100K account. So that 10% that they're paying, that 90% that you paid out, that 10% is not real money. So they didn't make money off of none of those trades that you took, even though them trades were profitable. They didn't make money off of that. Prop firms make money off of the failing traders. That's why they make rules to make it hard for you to pass, or they make rules to force you to trade, so they can make money off of the failing traders. Even liquidity, even if you deposit money into a live account right now, 9 times out of 10 you are still getting B booked. Brokers make money off of the losing traders. They don't make money off of the profitable traders. They're not making money off of the commissions and the spreads. They're making money off of the people that are blowing accounts because they're never getting withdrawals. It's the difference between A booking and B booking. I closed out $350 profit from NQ. Good shit. As long as you closed out something, you got some money, bro. It's a good trade. And you trade it short sell. Selling off of equal highs. That was a good setup. Selling off of equal highs up here. But yeah, it's the difference between A booking and B booking, right? Even if you deposit your own personal money inside of a prop firm, inside of a live broker, 9 times out of 10, they're still B booking your shit. They're not making money off of them little ass commissions or them little ass spreads. They're making money off of the people that's blowing accounts. So yes, prop firms do set rules for you to force you to trade, just because they're trying to force the losing traders to lose. So that way they can pay out the people that's winning. I think Top Step do A book you, but Top Step don't A book you until you make it to 3 consecutive payouts, and then you get transferred into the actual live markets. That's only I think I know that about Top Step specifically. I don't know about other prop firms, but before you even get A book to where you actually connected to a live account, to where you actually your liquidity is actually be entered in the market into the live markets, every account is demo. Literally, every account you're getting B booked. Even if you're funding, if you're funding and haven't got a payout, you're getting B booked. You're still demo trading. If you're trading a personal account with a broker, 9 times out of 10, they're still B booking you. So every account is demo, damn near. Unless you go regular to broker. Then if you go regular to broker, you're probably getting A booked. That's why they offer you shorter leverage, smaller leverage. Then you get A booked. But even if you deposit your own money, you're still getting fucking B booked. It's still demo. If you wanted a little bit more detail on that, just go on Google, look up the difference between A booking or B booking when it comes to trading, and then or ChatGPT, that'll give you. Actually, we can do it right now. ChatGPT.com. Difference between A booking and B booking in trading. And retail trading, especially for Forex CFDs, of A booking and B booking. This is, don't get it fucked up. This applies to NASDAQ as well. Just NASDAQ has more regulations. Futures have more regulations. A booking and B booking describes how a broker handles your trades behind the scenes. And it's basically their risk model. A booking, straight through processing ECM model. What happens? Your broker sends your order straight to the interbank market or liquidity providers that don't take the other side of your trade. They just pass it on. Broker's role acts as a middleman. They earn money from spreads and commissions, not from your actual losses. So when they say they earn money from spreads and commissions, not from your actual losses, this only applies to regulated brokers, not unregulated brokers. Your profit slash loss come directly from the market. If you win, you win from liquidity providers. If you lose, they get it, not the broker. This only applies to regulated brokers, not unregulated. Brokers incentive, they want you to trade a lot and stick around long term because they earn from your volume, not your losses. Right? That's A booking. Now B booking, what happens? The broker takes the opposite side of your trade. So basically, the brokers are fading your shit. Because 95% of traders fail, the brokers are fading your shit. Literally. The broker takes the opposite side of your trade. If you buy, they sell to you. If you sell, they buy from you without sending it to the market. Meaning you're not the real liquidity. They don't even send your orders to the actual market. Brokers role, they are literally your counterparty. Your profit loss, if you lose, the broker wins, and vice versa. Brokers incentive, they make money if you lose, so there's potential conflict of interest. However, they may also hedge big or risky positions to manage their own risk. While they use it, most retail traders lose, so it's statistically profitable for them to tick the other side instead of routing your trades. And most traders lose, they fade your shit. Literally. A booking, broker makes money from trading activity, not conflict of interest. B booking, broker makes money when you lose, possibly conflict of interest. Many brokers use a hybrid model. B booking small, unprofitable clients, and A booking skilled or high volume traders to reduce their risk. Literally. So I just looked it up with you in real time just to show you that everything I just said was not bullshit. Again, I got almost 5 years of experience. I know exactly what the fuck I'm talking about. When doing the evaluation for Top Step, will it be harder once you pass it? Once you're actual liquidity? No, you're not actual liquidity until you receive 3 consecutive payouts. That's first of all. Second of all, no, it's never harder. If you pass it, all you have to do is do what you did again. It's like shooting a jump shot. If you have a way to shoot the ball in basketball that proven to make shots consistently, that doesn't mean you're not gonna miss sometimes. All you gotta do is keep shooting it the same way you did when you first made them. Same thing with trading. If you did what you had to do in your personal account that proved to you that you could pass the profit firm challenge consecutively 2-3 times, and you got the profit target, then you went and purchased the profit firm account of $25K for $50 or $50K for however much, right? Then you pass that. That means you prove to yourself that you have what it takes to make it to a payout for a 4th time. Then you go to the funded phase, and then you make it to another. Then you make it to a payout again. You already did it 4 times. It doesn't get harder. All you gotta do is keep doing the same thing that you did the first 4 times. Nothing should change in your approach. Just do what you did over and over again. Being consistent, doing the same thing, taking the same setups, the same entries, the same levels, the same trade levels, the same everything you did before. Just do it again. So it doesn't get harder at all. All you gotta do is do the same thing you've been doing and remove emotion. It only gets harder when you start to add emotion to it. What's a better platform to use? I don't know because I haven't tried every single platform, but I could tell you the platform that I use. I use Alpha Trader and I use Top One Trader. Those are platforms that I use. But as far as a better platform to use, I don't know. There's a bunch of different platforms out there. Just do your own research. And if you're confused, go on YouTube and look up reviews. So remember when I first came on here, for the people that was here before, I said I'm looking to take buys off of this area, but in order for me to take buy first, I need this low to get taken out and print a lower high. We have our low, a lower high, and a new lower low. Remember I said if the price come down to retest this area and it's too aggressive, I don't take a buy because it's 9 to 10. It's going to be a fake out. This is happening in real time. And this is why I said to the one guy earlier, I recommend watching people live trade because you see the in real time reality of trading. You see I didn't FOMO buy here as price tapped to this level and started to push up. I didn't FOMO that buy. I still stuck to the plan. And as you can see, this level looks like it's going to get faked out because this retest is too aggressive and we never rebroke the high after the lower high after creating this low. So if we get faked out with this massive 1 hour bearish engulfing, I avoid a loss at this area and price 9 out of 10 will close back inside this range and then continue further. But again, I don't want to take these sells because again, looking at the 1 hour time frame, we have a higher high, a higher low, and a higher high. This is still a bullish market, so I don't want to sell a bullish market. But I still want to take buys, but I need this level to hold. See if this level hold or not. And everything else, I don't want to trade everything else. Like I was looking at buys above this area on Nasdaq, no buy. I mean no closure, no trade. NZDUSD, again, I was looking to buy off of this area. Once again, this retest too aggressive, probably going to be a fake out, which looks like it's happening right now. No trade. Everything else just is not where I would want to take a trade at. Like, it's in the middle of nowhere. Oh, I was looking at buys above here on GJ. No closure, no trade. So, this is the reality of trading. Well, we are trade basically. Only take pro trend setups to the higher time frame trend direction with the trade off of 1 hour levels with 5-minute confirmations for entry. If I don't get an confirmation entry, don't trade. How many confluences would you consider enough? I don't count my confluences. I literally just do the same thing, break and retest. Literally, all I need to see is something like this happen. Then, as price break above that lower high, after on a retest on the overall bullish market, I just take the buy. Stop loss below the low, then I look to target the previous high. So I don't count confluences. My confluences is my directional bias. That is my major confluence, whether I should be bullish or bearish. So my main confluences is knowing if I should be buying or selling. So in this case, I know I should be buying because our 4 hours in a bullish structure. We're making a new high in a 4 hour time frame. A 1 hour time frame is making a new high as well. Now we're just in a retracement phase of new highs. So that's the only confluence I need. Means though I'm on the right side of the market, potentially. Now I just need an entry reason, which will be a lower highs, and then wait for that structure, the bear structure, to shift bullish on a 5-minute chart, alongside the 1 hour chart already being bullish. Like I said before, the lower time frame tell you how the higher time frame will close. So if I see a 5-minute time frame going for lower low, lower high, lower low, then we give me an entry over here, meaning the 5-minute going bullish. 9 times out of 10, the 5-minute should continue bullish because it just shift bullish. And if the 5-minute does continue bullish, once that 1 hour candle closes, it's probably going to close as a 1 hour bullish candle because our 5-minute just shift bullish. So the low time frame structure tells you how the high time frame will close. So 5-minute goes from bearish to bullish. That tells me the 1 hour candle will most likely close bullish. 1 hour time frame going from bullish to bearish lets me know the 4 hour time frame has higher percentage to close bearish because the 1 hour is just shifting direction. 4 hour time frame going from bullish to bearish lets me know the daily time frame has a higher time frame, higher chance for that daily candle to close bearish, just because the 4 hour time frame is shifting bearish. It's very, very, very simple. I try to keep my trading strategy simple, and that's as simple as I can put it. The low time frames tell you how the high time frame will close, but the high time frames tell you the direction to go. I'm still in here for about 15 more minutes and I'm gonna get off. If I don't take a trade, I don't take a trade. It's fine. I'm not gonna try to trace this straight though. It looks like this level is failing, so I don't want to take a buy here if this level is gonna fail. And that's why it's important to wait for confirmations after a trade. Like, I knew I wanted to buy in this area, but I needed the 5 minutes to set up for my buys. It didn't set up, so I don't take a trade. What would you have to see on GU? I just need to see lower lows and lower highs. I need to see structure form on the 5-minute chart. And then I would take a buy after the 5-minute goes from bearish to bullish. So in this case, it's bearish right now because we took this low here. This is the line I had earlier. You know, we were bullish, and I wanted to see this low get swept. Once this low got taken out, they let me know we're going bearish. Now we see we have a lower low, lower high, and a new low. I just need the price to form a lower high back above this area, a low, and then price to break that lower high. Once price breaks the lower high, I'll look to take buys. If I lost below the low, now I'll look to target the previous high to the left hand side. Would be this target here for my first target, but my overall target will be this projection area all the way up here for the top of the zone. This is clean range to fill. Price will never go down or up forever. Yeah, I use buy stops and sell stops. So whenever price cranks that lower high, I'll just use a buy stop. So break of a high, yeah. If you don't want to use buy stop and sell stop, you want to be more conservative, to wait for a 5-minute closure above the highest wick. So in this case, this is the highest wick. It will be 5-minute closure above here. If price goes like this and it comes back up, it will be 5-minute closure above here. Yeah, so break it up, the high on the most recent lower high on the 5-minute chart if we make one. Mark your charts on the 1 hour. So yes, I mark my charts up on the 1 hour. I go to 1 hour and I ask myself, are we making new highs and new lows? If we're making new highs, I mark off the current high, the previous high, and the most recent high or low. For a bullish example, and as far as bearish example, I mark off a current low, the previous low, and the most recent lower high. So in this case, this is my current high, this is my previous high, this is my current high or low. I'm looking to trade off of my previous high and see if this level can hold. So far, it looks like this level not holding. I also have a YouTube for the new people in here. So I live trade on YouTube as well as TikTok. So if anybody missed a TikTok stream or whatever, and they want to rewatch it, or I said something or I explained something that they liked the way I explained it, and they want to rewatch it or revisit that topic, you can just go on my YouTube channel, which was be Tradeaholic FX. Go to live, and you will see any past broadcasts that I ever did. All here. So 1 month ago, 1 month, 1 month, 1 month. This is all last month shit. 4 weeks ago, 3 weeks ago, 3 weeks ago, 2 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 weeks ago, 12 days ago, 10 days ago, 9 days ago, 5 days ago. Well, yeah, this last time I got cooked on this Tuesday. This was Tuesday. I got cooked here, so I stopped trading. But if you want to watch any of my past broadcasts, you could do that on YouTube, or if you want to watch any of my videos where I break down price action or my live trading videos, anything like that, I have videos as well. And my live streams go all the way back down to about 3 years ago. Let's go to the bottom. You can see I don't recommend doing this, but you can see how my strategy progressed since how I used to trade 3 years ago versus how I trade now. It's a lot more simpler. Excuse my ignorance. How many DSYS do you mark up? I don't know what DSYS is. Back to get your support and resistance levels. I don't know what DSYS is. But I just mark off my current high, previous high, and previous high low 1 hour time frame. So let's go pull up a random chart. Let me give you an example. Let's go AUD CAD random pairs, something I just randomly thought of. AUD CAD, clear the chart, or 1 hour chart. I say this is my current high. I put a line here. This is my previous high, meaning my highest point before we made a new high, which would be this right here. Put a line here. My current high or low, I mean the lowest point before we made a new high, which would be down here. This is how I found my levels. Thanks for a YouTube channel, no problem. That's how I found my levels, and then I do a box from the highest wick to the lowest body, like this, and I extend it left and right. Again, same thing. Highest wick to lowest body, extend left and right. As far as the support, lowest wick to highest body, extend left and right. Because this level is sitting right above this one, I wouldn't even use this one. I would just delete it, because this is the overall range and not necessarily that smaller range. Then I'll just look left to see how this lines up with previous price action. And as you can see, we got a rejection here, pretty close here. We got a rejection here, and we got a rejection here, we got a rejection here, and we got some fake outs happening over here. Got a rejection here. So that's it. And that's how I found the levels to trade off of. As this case, when I was bullish, we have a high, low, high, and we look to take some buys above this area. That's it. Pretty simple. Mark off the current high, previous high, current high or low. Clean up the range to make sure it's not too tight, and then look for a trade that supports the directional bias. And I look to target my next rejection area. This is clean price action to the left hand side, so our next target wouldn't be to the highest body, lowest wick, all the way up here. So if I was to actually get this buy, stop loss below a low, target the high, something like this. Hopefully that makes sense. And then same thing, current high, previous high, low. Look left. We got rejections off of this here, rejections off of this here, a fake out here, rejection off of here, rejection off of here, rejection off of here. This is a very, very, very strong level. Not about how far I go back. It's just more relatively close to current price, to be honest. So this is the area I wanted to trade off of. Look like we're not holding up. But a good thing about this trade, this 1 hour had no top wick. So because the 1 hour had no top wick, that let me know this 1 hour has the potential to flip. But there's only 5 minutes left in this candle, so that means this 1 hour candlestick probably not going to flip in bullish in the next 5 minutes. Just look at the forward time frame. and make it look to take a trade based off of our next 1 hour candle. Not necessarily this one. Anticipating that price will eventually come up to make that top wick that it forgot to make up here. So I do think this level is price is gonna come back up here. It just might not come back up here right now. But I do think this price is gonna come back up here just because this candle has no top wick. Oh, let me send a Discord to that guy earlier. I sent a Discord link out. I'm gonna do it right now before I forget. All right, there we go. Send that Discord link out. Oh, what's good? What's good in features? Welcome to the stream, bro. I think it's my first time seeing your name here. I'm gonna stay on here for about 4 more minutes and I'm getting off. I'm not gonna stay here all night and watch this level fail, bro. To be honest. So no trade day for me. Thanks for your time, no problem. Thanks for stopping by the stream, bro. Thanks for all the new followers as well. I think we got 12 new followers this stream. Shout out to the 12 new people that just joined the game. If I got some videos y'all want me to make, like as far as TikTok videos or whatever, or YouTube videos, let me know. I'm open to ideas. I luckily want to put more videos out, but like, I don't even be knowing what to make, to be honest. Buying NQ loans, taking some NQ loans. Or let's see what you're looking at. You're looking for this level down here to hold. I hope your trade play out, game. Yes, it has to be expected. Yeah. I hope that setup plays out for you, boy. My boy. Not gonna lie. Oh yeah, I'll be at a band for the night. Yeah, you cooking with some? You cook with some fucking grease over there. I need to watch you live trade, my boy. All right, I'm gonna end the stream here. We got 19 seconds left before 4 a.m. and I'm gonna get up out of here. Thanks for everybody stopping by the stream, man. It's your boy Traderholic, and I'm out chat. Peace. I was short GPUSD. Nah, I'm not gonna do that. It's counter trend. I want to short the market is making new highs. I'm gonna wrap it up here though. It's your boy Traderholic, and I'm out. If you want to join the Discord, send me a message on TikTok, and I'll send you the link. Similar to the Emmett trade on New York. I didn't see Emmett trade. Well, similar to Emmett trades on New York. Yeah, similar to that. But he more so of an intersection volume. I'm trading with the higher time frames. He really just focused on the lower time frame, to be honest. But and I think his stop loss placement is a little bit different than mine. But yeah, similar to Emmett, Loki.